If you've ever been happy about multiple 60-degree days in a row, go ahead and hit that like and subscribe button, folks, and welcome back to another episode of Benzinga's Pre-Market Playbook. Today is going to be the Tuesday, February 17th edition, where we kick off a truncated week. Hope that you all had a wonderful President's Day and day off yesterday. I know I did. The weather was spectacular, and it actually looks like it's supposed to be good again this week. We'll see. Great to see a whole bunch of returning faces here today. We do have some news to go through. There's going to be some earnings tonight. There's a takeover this morning on one of the stocks that we look at, one of those shipping stocks that we look at. We're going to cover all of that for you here today. Benzinga's Pre-Market Playbook, the Tuesday edition, Synthetic Monday, but Tuesday edition for February 17th, 2026 begins right now. Good morning and welcome back, folks. It's great to see a whole bunch of returning faces out there. I hope that you all had a wonderful extended weekend. Were you able to get some break time in there? You'll have to let me know. We are back for another week here. It is going to be truncated with the President's Day holiday, but that doesn't mean we're going to be short any excitement. I'm going to make sure that we have another good week here today. Richard Judge is going to be first here today. Hello, Judge. Good morning. Early bird gets the worm. Early bird gets the worm. Thanks for sending that positivity into the universe. Welcome back. Crispy Biscuit. Good morning. Welcome back. Francis, it's good to see you again as well. Zach McCracken is locked in and ready to go. Market is in a holding pattern. We're going to take a look at the SPY chart. You can really see what kind of holding pattern we're in. We'll see which direction it picks next. Will it be this week? Will it be next week? We'll have to wait and see. Solitary Soldier, good morning. Welcome back. Rich in Debit. Good morning. Welcome back. Big Dave says, happy Mardi Gras. Eat, drink, make merry till midnight. I actually is it Mardi Gras? I completely forgot about that. But yeah, I'm not going to drink. I'm going to drink tea. but I will absolutely be merry. I can promise you that. Welcome back, Big Dave. Peter, good morning. Good to see you again. Corey, good morning. Good to see you. Corey, I did see your email here. Sorry, I was busy this weekend, but I'll get back to you today. Kelly, good morning. Welcome back. Buffalo by Bicycle, good morning. Welcome back. Yes, that girl, good morning. Welcome back. Producer, we missed you, man. We missed you. Welcome back, though. K-Kicks, good morning. Welcome. Matthew, it's good to see you again. Happy Fat Tuesday. Looks like y'all are ready to celebrate Mardi Gras, which is awesome. I'm the one that's behind here. I didn't have any plans or celebration going on. That's okay. Lost Penny, good morning. Welcome back. K-Kicks, good morning. Welcome back. Jim, good morning. It's good to see you again. Welcome back. Brian, good morning as always. Brian doesn't like VMNR. We'll see how that's trading here today. Nancy, good morning. Welcome back. Happy whatever day you want to call it. Let's call it Tuesday, just to be simple. If you wanted a more creative name, I guess we could go Synthetic Monday. But we'll call it Tuesday. Good to have you back here. The American Nightmare, good morning. Tyler, good morning. Welcome back. It's good to see you as always. Day Trader, good morning. Welcome back as always. Marty, good to see you. I'm here for happy head bobbing music. Keep on bobbing in the free world. All right, Marty. We can deal with that. Harvey, good morning. Good morning from Jupiter. Is that Jupiter, Florida? Is the weather down there amazing, Harvey? It's great to see you. Welcome back. Hopefully you are doing well. Chuck, likewise, good morning. Welcome back. Good to see you. Dive Deep, good morning. Welcome back. Lambo Rolls, good morning indeed. Welcome back, Lambo. It's good to see you. Cam, good morning. G-Cord, good morning. Austin, it's nice to see you again. JJ, welcome back. Bernhard, welcome back. Wiss, how was the golfing over the weekend, Wiss? How'd you shoot? I'm super excited to get back there. I like the simulators, but man, I'm at the point now in the year where it's like, just open the courses. Let me out there. Philip, good morning. Welcome back. Cam, good morning. Welcome back. Nice new spot. I love the high rise. Yeah, it took me a while to do this. I don't really care for high rises, but they convinced me that I had to. So that's what we did. Cam, good morning. Rooster, good morning. Ed, good morning. Kenzo, good morning. Maverick, it's good to see you again. Good morning. Just passing through, good morning. Yvonne, good morning. And Edward, good morning. All right, folks, let's go ahead and get started with our stock market today. All right, futures under pressure ahead of Tuesday's open here. It actually looked like we tried to bounce earlier here in the pre-market, but we've rolled back over to the overnight and pre-market lows. S&P futures down 0.53%, Dow futures down 0.2%, and the NASDAQ futures down 0.98%. So under pressure ahead of our open. Let's go ahead and take a look at some cues from last session here. Oops, excuse me. Utilities, real estate, and materials led the S&P 500 gainers on Friday, while communication services and tech bucked the trend to close lower as U.S. stocks settled mixed. Weekly losses hit all major indices last week, with the S&P dropping 1.4% and the Dow slipping 1.2%. The NASDAQ recorded a 2.1% weekly decline. So we continued to see some of the exodus out of the big cap tech leaders. We've been watching that for a while. We got more of that last week. We'll see if that continues here this week. Meanwhile, congressional Democrats and the Trump administration failed to agree on a funding deal through September. That triggered a partial government shutdown that commenced on Saturday. From the reports I was seeing this morning, it was something like only 3% of the government is closed. I would say, as far as trading goes here today, this is much ado about nothing unless something else happens. And we'll see how it shakes out. Investors will be looking out for earnings releases from Walmart, DoorDash, and Molson Coors throughout the week. In fact, really quickly here, here's a look at the earnings scheduled for this week. Most notably, tonight is going to be Palo Alto, but several other big reports coming this week, and we'll follow that as it continues. The 10-year Treasury bond yielded 4.02%, and the 2-year bond was at 3.39%. The CME Group's Fed Watch Tool projections show that the market is pricing in a 90.2% likelihood that the Federal Reserve holds interest rates unchanged at the March meeting. This is all what we expect. I know that percentage has oscillated a little bit, but we're back in the 90th percentile, and we all kind of think that that's just going to hold steady there. We have several stocks in focus here for you today. Let me find my mouse. Ocular Therapeutics is going to be the first one. The ticker on this is OCUL. It soared 33.56% as it was set to announce top-line data for the SOL-1 Phase 3 superiority trial in wet AMD on Tuesday. Now, interestingly enough, this stock did soar up to 1334. It actually closed at 888, traded up to 1334, but in the pre-market today, we have a massive reversal. Gigantic sell-off on volume here, actually hit a low of 510, currently sitting at 693, so it is about 2 points lower than Friday's close. The stock's already had kind of a wild morning, and we're expecting more of that in the regular session. The next stock on our list here today is going to be Sunoco Products, and the ticker on this one is SON. It gained 2.38% after posting upbeat results for the fourth quarter. The company reported quarterly earnings of $105 per share, which beat the analyst consensus estimate, of $1 per share. It also sees full year 26 adjusted EPS of 580 to 620. That was against the 596 estimate. So that estimate pretty much in line for the full year guide on ticker SON. The next stock on our list is going to be Massimo. The ticker on this one is MASI. It jumped 33.85% after the life sciences firm Danaher is closing in on a nearly $10 billion deal to acquire pulse oximeter market Massimo. That is per the Financial Times. The next stock on our list is going to be Toll Brothers. This is one of the home builders that we've been looking at quite a bit to try to get an idea of what the housing market is doing and what its next move might be. Toll was, ticker TOL, was 0.07% lower as analysts expected to report earnings of $2.11 per share on revenue of $1.85 billion after the closing bell. Also, keep in mind, especially with the builders and any real estate company that reports here in February and March, remember that it is this spring quarter or these spring months that's generally the best time for home buying. And these earnings reports, it'll be interesting to see how they guide and what they say about that upcoming season here. Home buying, of course, not been the best area to be in. The next stock and last one on our list here today is an oldie but a goodie. This is Zim Integrated Shipping Services. The ticker on this one is ZIM. It surged 34.46% after the company agreed to be acquired by Hapag-Lloyd for $35 per share in cash at an aggregate cash consideration of approximately $4.2 billion. All right, let's go back to the SPY chart. Let's take a look and see where we are. Oh, did it just delete all of my drawings and stuff? Let me try loading that up again. Oh, nope, there it is. Just took a sec. All right, now the first thing that I wanted to mention earlier is that the market's kind of traded sideways. You were kind of mentioning that earlier, Zach. Here's what it looks like on a daily chart. If you back out a little bit, you can see we were in really an epic recovery post-Liberation Day last year. We really started to give that up towards November. We did not have the greatest holiday season in terms of Santa Claus rally and market performance. And really what we've done is we've just kind of traded sideways. Now, I will say it has been sideways with a slight bias to the upside, which is normal. But for the most part, we've just traded sideways here. And it feels like we're getting close to picking a direction. I still think that SPY 700 is going to be a print that happens here before any type of correction. In other words, if I had to bet, I would say that the market trades up, at least on the SPY here, the market trades up to 700 before we really get any type of pullback, 5%, 10%. Garden variety correction, or even a scarier one than that if that does end up happening. We'll see if we end up getting that. Kind of feels like that. Option players have been positioned for that, but it just hasn't happened, and it's been several weeks now where we've made several attempts to the upside of the range, but really didn't have the catalyst or the strength to push to that 700. Where we look today, we had closed above the 100-day on Friday, but the weakness here in the pre-market, remember, it was initially weak, and then secondarily, it's been weak after we tried to trade back up. We currently find ourselves right beneath the 100-day moving average. I actually have that value at 679.73. We're at 677.36, and we were above 680 earlier in the pre-market session. So looks like we're testing the 100-day here. Ultimately, we would really want to see how the candle from today closes. But right now, this is sure showing signs that we might try to roll over here a little bit and trade back down to some previous all-time high breakout levels. The one that I have targeted first here is going to be 673. I have it marked off on the chart as 672.99, but it's 673 for all intents and purposes. We'll see if that holds it at all, or we'll see if we trade to the bottom end of the range. That's at 667.34. I do expect this area to catch us at least temporarily. Let's take a look at some insights from analysts here. Renowned economist Mohammed El-Arian views the 2026 economy as a tense tug of war between three distinct futures, a stable Goldilocks-like baseline, a productivity-fueled boom, and a volatile downside. It basically hits all three possibilities there. Just remarkable. He warns that the broad AI enthusiasm that propelled markets in 2025 is shifting towards a more skeptical anti-AI sentiment, although personally, I would say that we're kind of entering phase 2 of the AI trade. This is something that Tim Melvin has talked about. AI trade's not over. It's just kind of shifting who's leading that. Investors are increasingly focused on creative destruction, fretting over which sectors will be disrupted before they can successfully adapt. El-Arian highlights an unsettling structural shift, the decoupling of GDP growth from job creation. He notes that while the economy remains macro-resilient, growth in 2026 may be accompanied by a relatively stagnant labor market, potentially exacerbating economic inequality. Furthermore, he cautions that the Federal Reserve faces a tricky path as sticky inflation persists. For the stock market, El-Arian expects a move away from the limitless potential narrative towards a tactical bottom-up environment. He emphasizes that the standard playbook of riding broad waves is over, stating that 2026 will not bring more of the same. It should be a year of recalibration. Now, on the surface here, recalibration wouldn't be a bad thing at all. And frankly, if we get more of these market leaders to come into more, let's call them sensible valuation levels, perhaps that can really make for a pretty good entry for a swing or perhaps an investment. Additionally, we'd like to see some other stocks really kind of lead the market here. I think we're all probably tired of just constantly checking in on Apple and Google and the NVIDIA and the rest of the Mag 7 names. I think it's very clear AI is not going anywhere. Really, the next question is going to be who's the leader? And if we get some of these AI IPOs this year, do they take over from some of the Mag 7 stalwarts that we've seen more recently? Success will now depend on identifying companies that effectively integrate AI rather than just those building its infrastructure. And this is going to be a key point. Like, we're at the point now where you can't just say, oh, here's another $100 billion towards AI investment. We want to know what the AI does. We want to know does this make our life better? How does this make us more productive at work? What new things can we do because of the AI? Now, we do have, despite it being a truncated week, we do have some economic stuff that we're waiting for here. I'm going to run down the list for the week. On Tuesday, February's Empire State Manufacturing Survey data will be released at 8:30, and February's Home Builder Confidence Index will be out by 10. On Wednesday, November and December's delayed housing starts, building permits, along with December's delayed durable goods order data will be out by 8:30. January's industrial production and capacity utilization data will be out by 9:15, and minutes on the Fed's January FOMC meeting will be released at 2. On Thursday, initial jobless claims for the week ending February 14th, December's U.S. trade deficit data, February's Philly manufacturing survey, and December's advanced U.S. trade balance in goods, advanced retail inventories, and advanced wholesale inventories data will all be released by 8:30. Minneapolis Fed President Neil Kashkari will speak at 9, and December's leading economic index data will be out by 10. On Friday, we get the fourth quarter GDP number. December's personal income, spending, headline, and core PCE data will be out by 8:30. That will probably be the big print of the week. February's S&P Flash U.S. Services and Manufacturing PMI will be out by 9:45. November and December's delayed new home sales report and February's preliminary consumer sentiment data will be out by 10. All right, let's dive into some of the news here. First one is going to be on Eli Lilly. This has been the big winner from the GLP-1 phase. This stock's just an absolute monster. And we've been talking about this some more. It actually seems like maybe if this can break 1,100 and continue to trade higher, we might also take another leg higher. Eli Lilly's experimental cancer drug cuts reoccurrence risk in early stage lung cancer patients. This is, of course, hits home for me because I lost my father to lung cancer. Eli Lilly, ticker LLY, on Monday shared positive top-line results from the phase 3 Libretto 432 clinical trial for Retevmo. The trial demonstrated a highly statistically significant improvement in event-free survival for patients with early-stage non-small cell lung cancer. The Libretto 432 trial results showed that the drug significantly reduced the risk of disease or reoccurrence or death in patients with RET fusion-positive non-small cell lung cancer. The trial is the first randomized phase 3 study evaluating a select RET kinase inhibitor as adjuvant therapy, reinforcing the value of genomic testing in cancer treatment. In addition, the overall safety profile for the drug was consistent with previous studies, and detailed results are expected to be presented at an upcoming medical congress. The trial enrolled 151 patients who received either the drug or a placebo, making a significant step in the treatment of early-stage lung cancer. Selpercatinib is, I believe, how you pronounce the drug, but instead of embarrassing myself several times throughout the article, I'm going to call it the drug. If anyone is interested in the actual piece of news here, I will drop that in the chat for you. The broader market experienced a mixed day on the previous trading day, with the S&P futures down 0.4%, while the healthcare sector remained unchanged. Eli Lilly's gains come as the healthcare sector is currently ranked 8 out of 11 sectors, indicating mid-tier performance. Eli Lilly shares have increased 21.33% over the past 12 months, this reflecting a strong upward trend. Currently, the stock is trading above its key support level of 1,033.50 and is positioned to close over its 52-week highs more so than its lows, suggesting continued strength in the price action. The RSI is at a neutral level, indicating that the stock is neither overbought nor oversold at this time. And meanwhile, the MACD is also neutral, suggesting a balanced momentum without strong bullish or bearish pressure. The combination of the neutral RSI and MACD suggests mixed momentum, indicating that traders should watch for a potential breakout or signs of a reversal in the near term. Just some numbers for you if you're interested. Key resistance there, 1088.50. I called it 1100, but the actual number there, 1088.50, and your key support, the 1033.50 number that we already talked about. The stock does carry a buy rating with an average price target of 1141.70. And some recent analyst moves include Deutsche Bank going to buy and raising the price target to $12.85. JP Morgan at overweight, they raised their price target to $13.00, and Cantor Fitzgerald is overweight. Their price target went up to $12.05. Now, Lilly scores really well in quality. In fact, almost the 91st percentile and almost the 85th percentile there in momentum. Remember, that combination of momentum and quality has been one of the favorite scans of Tim Melvin, and it sure looks like Eli Lilly hits that quite well. All right, I saw some of you talking about this earlier today. We're going to cover this a little bit more, and I will drop the news story in the chat for anyone else that wants it here. Infosys is going to join forces with Anthropic, and this is supposed to revolutionize enterprise AI. Let me know if you guys think that that is, in fact, the case. On Monday, Infosys Limited, the ticker is INFY, for anyone interested, unveiled a strategic partnership with Anthropic. The company announcement aims to enhance enterprise AI solutions across several industries, including telecommunications, financial services, and manufacturing. Infosys and Anthropic collaboration focuses on integrating Anthropic's Claude models with Infosys's Topaz AI offerings. Let me know if you're keeping up with all of the AI lingo. This integration is designed to automate complex workflows and accelerate software delivery while ensuring transparency and governance, especially in regulated sectors. By leveraging their combined expertise, the two companies plan to develop custom AI agents tailored to specific industry needs. These agents will enable enterprise to handle multi-step tasks, such as compliance reviews and code generation, more efficiently. Now, it'll be interesting to see what the long-term effect is, but this is exactly what we were talking about. How is AI actually going to benefit compliance reviews and code generation more efficient on doing some of those more daunting tasks? Probably a good thing. What will that actually lead to? We're not sure yet. Beginning with telecommunications, Infosys and Anthropic will establish an Anthropic Center of Excellence to build and deploy AI agents. These agents will be particularly beneficial in industries that require precision and compliance, such as the financial services and manufacturing. According to Dario Amodei, the CEO of Anthropic, the collaboration addresses the gap between AI models that perform well in demos and those that meet the stringent requirements of regulated industries. He emphasized the importance of domain expertise, which Infosys possesses in abundance. Salil Parekh, CEO of Infosys, noted that AI is reshaping the industry's operations and innovation. The partnership with Anthropic represents a significant step in advancing enterprise AI, enabling organizations to become more intelligent and resilient. The collaboration will focus on modernizing legacy systems, combining Infosys, Topaz, and Claude to facilitate migration and reduce costs. This modernization is expected to drive AI value realization for global enterprises. And again, how effective will they be at that? It remains to be seen. All right, next story here. This is going to be on Amazon. I hope Izzy's out there. Amazon's 9-day losing streak is overdone, according to Futurum's David Nicholson, and calling for a $400 billion rout a game of chicken. Despite Amazon's enduring its worst losing streak in 2 decades, I didn't actually even realize this was Amazon's worst losing streak in 2 decades. But considering it just endured that, Futurum Chief Research Officer David Nicholson argues the market's aggressive sell-off is driven by anxiety rather than a shift in business fundamentals. Amazon recently faced a historic 9-day losing streak, its longest since 2006, resulting in a staggering $400 billion wipeout in market capitalization. Somewhere, Jeff Bezos is drying his tears with $100 bills that he doesn't give a damn about. The decline saw shares slide 18.19% in these 9 days and 12.23% year to date, which was largely triggered by concerns over massive capex targeting AI infrastructure. However, Nicholson suggests that it is a psychological phenomenon rather than a structural failure. Quote, "Nothing has fundamentally changed," end quote. Nicholson said this during an interview with Schwab Network on Market on Close. He goes on to say, quote, "I think there's been a case of the world between our ears changing while the world around us stays the same," end quote. Amazon does maintain a price trend, or maintains a weak price trend, over the short, medium, and long term. Perhaps that's set to change here. Still scores very highly on the quality ranking in the 71st percentile, and still quite well on the value ranking in the 58th percentile. The core of the investor panic lies in the timeline for seeing returns on AI investments. This is all over the place. Nicholson characterized the current trading environment as a high-stakes standoff between big tech and Wall Street. Quote, "It feels like a game of chicken," end quote. He goes on to say, "How long can we keep these bets on the table without seeing what we believe are tangible, positive ROI movements from these firms?" He emphasized that while investors are getting anxious, the actual go-to-market strategy for AI remains a robust industry that justifies long-term balanced portfolios. So, who of you are looking to add Amazon here for a potential big type of run? You'll have to let me know. He emphasized, addressing fears that AI might cannibalize the software sector, Nicholson noted that enterprise level clients remain risk adverse. He believes major players like Salesforce and ServiceNow are protected by their roles as trusted filters for new technology. Well, he acknowledged that at the margins, there's going to be some pressure on traditional legacy SaaS providers. He dismissed the idea that AI models would immediately displace established giants. And this, I think, is an important takeaway from this. I don't think AI is really going to destabilize any of the established players in any of these businesses. I would imagine that the bigger players are just going to find a way to harness AI and better their offerings. Think some of the software names that have gotten killed here, like TurboTax, like Intuit, or Adobe, or some of the other names that have just really been killed. I don't think those big companies are just going to give up and just come in. They're going to use AI to better their offerings, make them more efficient. He closes here. People aren't going to come and build their own tools in the enterprise, reinforcing that the current market volatility is a reflection of sentiment rather than a new negative reality for the AI space. So we'll see there. And then really quickly here, before we get to our guest for today, I had a quick story on Apple. Just know we've got another event coming here. Apple is gearing up for a, quote, special experience, end quote, event. That event comes on March 4th, so we're only half a month away. Apple announced on Monday that it will hold an event on March 4th in New York, London, and Shanghai. The iPhone maker issued invitations to select media members for a unique event dubbed, quote, the Special Apple Experience, end quote. The invite showcases a 3D Apple logo composed of yellow, green, and blue discs. The term experience has been used in place of the usual event. Unlike Apple Park's typical live stream events, the March 4th gathering is expected to be more intimate. According to Mac Rumors, the company is expected to unveil multiple new products, such as the iPhone 17e, MacBook Pro featuring the M5 Pro and M5 Max chips, an 8th generation iPad Air, 12th generation iPad, and others. Who's excited about this event? Additional possible launches may include an updated studio display, a budget-friendly MacBook with the A18 chip, a new Apple TV, and a HomePod Mini. Do any of those products move the needle at all for Apple? I feel like maybe the chip. I don't know about the HomePod, though, and Apple TV. Earlier this year, Fitzgerald CIO Keith Fitzgerald suggested that Apple was preparing for a significant product launch this spring, reminiscent of the iPhone's revolutionary form factor change. Another report suggested Apple would focus on premium iPhone launches in 2026, delaying the release of its standard model amid the memory chip constraints. Moreover, in November, reports indicated Apple plans to enter the low-cost laptop market with a new budget Mac. The device, codenamed J700, is being designed for students, businesses, and casual users. According to the report, Apple plans to release a budget Mac during the first half of 2026. So perhaps that's the new MacBook Air that we're set up to see here. Apple, again, scores very well on the quality, the 94th percentile, not much in terms of value, and decreasing momentum, although that can all change fairly quickly. All right, folks, it is Tuesday. I know it feels like a Monday. But I promise you it's Tuesday, which means it's a T3 Tuesday. Let's go ahead and bring on our guest. Today, we've got Dan O'Brien with us. Dan, good morning. How you doing?
Good. How are you? Is my microphone working, Ryan?
It is. Actually, we got a little bit of a better angle this time, too. Microphone sounds really good. How was your 3-day weekend?
It was great. Great. Weather's been beautiful down here in Florida, except this morning it's a little cloudy. It's a little odd to see that, but It happens.
Oh, I'm clouds never killed anybody. I'm sure we'll be okay there. All right, folks. Dan O'Brien uses his own proprietary algorithms to make fast-paced futures trades, and he's sharing how it all works in his free webinar today at 8 p.m. Eastern. QR code on the screen. We'll also throw a link there in the chat in case you're interested in this. Dan, let me just start with that. I had talked earlier about the SPY really, or the market really looking like it wants to go to 700 for the SPY or 7,000 for the S&P cash. What do the futures tell you about where we're at right now and perhaps what the next direction might be for the broader market?
Right. I heard you discuss that, and I agree with you 100%. The market has been slowly going up in like small ranges and sideways for very long periods of time, yet there's still this upward bias. What surprised me, though, over the last few weeks, Ryan, is that we're at this number 7,000, and above it should be a clear breakout. I'm looking at 7,200 in the futures. However, it didn't happen. And with last week's late drop, we're at what I would consider a make or break area. The market was down here about a week or so ago and had a violent reversal up. I think it was a Friday. So if it breaks through this level, I think the SPY and the ES are going to the 200-day moving average. But what happens there? 99 times out of 100, buyers are waiting for it, almost praying for it. Like, if it's going to go down, just take it down to the 200-day and we're going to buy like crazy. So I think we're at a very important level, say in the future, 67.50, right around there, give or take, say 5 points. And for me, if the market, when it gets to any one of these levels, it has to be moving with gusto. It has to have some real velocity of price movement. And then that would tell me, okay, we're making the break. Or the opposite happened when we were up and the futures were up above 7,000, where it was just going up, making a new all-time high and coming down, a new all-time high. And then, it was lame. There was no velocity of price movement. So I thought, okay, we're going to get yet another, what I call these sideways moves during day trading. I call them coffins of congestion. And on a daily basis, we have that as well. So we're between 6,800 and 7,000 roughly in the futures, and the SPY. Give your numbers there. They should be.
I think we might have lost him there. Really quickly, just to kind of hammer home on one of his points. The 200-day is absolutely the next moving average that we have talked about quite a bit here. We really wanted to see one of these levels get tested. And the other thing to note is that 200-day, I currently have this at 649 and a quarter. The reality is that this is creeping up from the low that we made on November 21st. So it's quite possible that by the time the market rolls over here, we actually have a really clean area here that would represent both the 200-day and the recent low from November. And to Dan's point there, let's just have, if it's going to do it, let's just get it done, right? Let's just rip the Band-Aid off, have this come in. If the market comes into an area that looks tradable to us, like the 200-day, which I think every trader and their mom has plotted on their charts, if the market comes into this, maybe that actually gives us an opportunity to buy and feel like we can hold it for longer than 5 minutes. What do you think?
Absolutely. And as I mentioned before, most traders and even think the institutions, when it gets down to this level, first of all, if you haven't mentioned the 200-day moving average in a while, it's because it rarely gets there. And so when it does get there, even institutional traders are saying thank you, and they're buying it. And so unless something crazy happens, and it's a black swan event, something, and I would only think it would come from overseas, or maybe something bad in the Japanese yen and the repatriating dollars that's going to hurt the U.S. Treasury market. Something really bad like that would only take it through the 200-day, and nobody can see that happening. So the first line of thinking should be get ready to buy it if it goes there, and I think there's a pretty good chance that it does, actually.
Okay, I'm all for it. I'm generally a bull. I'm try very hard to be optimistic every single day. But I think even at this point, as you mentioned, it's been a long time since we've been down at that 200-day. Need I remind you that the last time we came into the 200-day, we broke it, back tested it, rolled lower on the tariff announcements. And then on the way back up, once we recaptured this, we got the exact same action. We recaptured the 200, traded up, retested it, held it, and then went on a great, magnificent run. I will take that anytime, right? That
Right.
would be great for trading here. I'd be able to shift more into swing trading than day trading, and I'd be able to hold these quality companies that we're looking at. Now,
So Brian, every day for my clients, I send out a video,
mhm,
and one of the things in there is a daily, a weekly, and a monthly trend that I will update, of course, every day. And I'm looking at your SPY chart. So this whole way up, everything was bullish, and occasionally the daily trend would flip to bearish, only for a few days, and then come
mhm.
right back up to bullish until last week. Now, last week it went weekly and daily bearish. That's the first time it's happened in about a year, which is another reason why I'm thinking that we are going to go test the 200 day.
Okay, really good stuff. And you know what? I should have gone to this earlier. I appreciate you keeping me in line here. A quick look at the SPY weekly chart. You'll notice that, in fact, we are actually under the 20-week moving average. Whether we look at this on a weekly or a daily chart, this is indicative of the trend. And as you mentioned, now we're beneath that for the first time in a long time. We've come
Right,
into this before, but we've held it. Now we're beneath it.
right.
Will this trend continue to the downside? Yet to be seen. Okay, really good stuff there. Dan, look, the last time that we were together, I believe it was mid-December. So it was as we were gearing up for the holidays here. It was right after Thanksgiving. The Bears were still playing football, so I was super happy. But we had talked a lot about the Santa Claus rally. And I know, I think it was December 16th, I want to say. It was middle of December, so we weren't quite in the Santa Claus rally period. But we were talking about it. We were talking about would we see it. We didn't really get the greatest December. We ended up not really seeing a Santa Claus rally. So I fast forward to where we're at now, and I wonder, with someone that trades the futures often, what do you think in terms of the seasonality? Well, I know February traditionally not a great month for the market. So here we are, we're up near all-time highs. We're talking about maybe the sentiment flipping to bearish here. But I think it's important to remember that we're in February, and traditionally this is not a great month. A lot of the times it bottoms in the middle of March. Given what you've seen with the Santa Claus rally really not kind of holding up there, the market kind of being a little bit different, do you think that we stick to the seasonality trends that we've become accustomed to?
Well, that's a great question. And I would say probably not,
Okay.
because the market is so high as it is. And one of the things you were talking about earlier as well is AI.
Mhm.
And the market is so focused, or it's like all the money came through a funnel and went to six different companies, five or six companies. And when those are getting hurt and they're overloaded in the NASDAQ and the S&P, when they go down, that's going to change any seasonality, normal trends that you would otherwise have, that the average person or even someone on Wall Street is used to trading off of. It's just too concentrated in too few shares. And when they get moving, that's going to change everything. So right now, I'm not really focused on that.
Okay. I'm thinking about I'm trying to draw parallels here to real life. Do you play poker at all? Do you play cards at all?
Not really.
Okay.
When I go to
So
Vegas, I count cards at the blackjack table.
I'm sure they love that you're counting cards there. That's phenomenal. Anyway, when it comes to this, kind of reminds me of a poker game. Right, you got all these big players kind of sitting at the table here, and they're betting back and forth. And think of the big players as some of these AI companies, and they're betting back and forth. And everyone that's sitting off to the side is like, "Oh my God, this is going to be a crazy hand. This is going to be crazy." And we're hearing all this stuff about AI and how it's going to change things. And then it comes time to show the cards, and they flip their cards over, and you got company X, whoever you want to pick as the winner. I don't really care, is it ends up winning with like two pair, like 7, 10, two pair. Like there's all of this AI stuff that they're doing. They ended up coming out with chatbots. And so part of me is wondering the AI product, what's the next big thing here? And is it going to be enough to not only take these companies, this seven companies that we've really been focusing on, but is it going to be enough to move the entire market to the next leg higher? Or are we kind of seeing the players at the table, or the watchers at the table saying, that was kind of a letdown. I'm going to go see a show. I'm going to go do something else.
In my humble opinion, that's what's happening.
Okay.
And there was a big study done recently from MIT, of all places, that I haven't read the results on this. So I don't have lately, I don't have the exact numbers, but if I recall correctly, this MIT study uh, focused on companies around the United States that were paying for AI, and did it actually move the needle on their profits? And the answer was no. And I thought, wow, how much longer can these, 5 or 6, 7 stocks drive the market higher when the firms are going to start to say, whoa, we need to pull back on this. And then the CapEx spending is just going even higher. It just seems like it's kind of mixed up, and there's no. I mean, there is a clear path for the very long term future, but the market is concerned with, what have you done for me lately? And if there's nothing happening now, that's why I'm not surprised to see these dips that we've seen over the last week and a half or 2 weeks. However, one thing that was pretty surprising that I saw over the weekend was something that ByteDance had. I wrote it down here. It's called C Dance 2.0, and you can give it one prompt or two prompts. So make me a short-term movie that does this, and the results were shockingly good. Where not only was the video excellent, but the voice of the actor was excellent, and it's so shockingly good that lawyers from all over Hollywood just yesterday were just losing their mind, telling ByteDance, "Hey, you better take all of this stuff out of your program, or we will be suing you in a huge way." So the advancements are coming so quickly that what I just mentioned, that it's kind of mixed up, that could change in a snap of a finger. And we just saw it over the weekend, just crazy good.
Okay, yeah. I mean, maybe video effects is going to be in trouble here, right? A whole bunch of work that can be done for pennies on the dollar with that. Okay, look, you're a futures trader here. The group would literally riot and would not let me show up tomorrow if I did not ask you about gold and silver. Do you watch any of these? Are you trading any of these? And perhaps most importantly, what do you think's happening next?
Well, okay, so gold and silver, I don't trade them actively on a daily basis. I know that sounds, well, what are you talking about? You're in the futures and you don't trade that. I don't. I really focus on the S&P and the Nasdaq. But I do keep an eye on them. It can't believe that silver traded at $120 an ounce. What was it, maybe 2 weeks ago? So they had their shocking drop in the silver and gold. I'm looking at gold here to my left, and since then they've come up and they're doing the sideways coffin of congestion here on a daily basis. I think we go back up and test the high. And as a matter of fact, speaking of this past weekend, Goldman Sachs commodity. Sorry, take that back. It was Goldman Sachs commodity trader said that he believes that gold is going to make new highs relatively soon, and by a lot. And as far as the charts go, again, it was a shocking drop of a couple of days, and I think that given this holding period where we're in, if they go back and test gold down in around 4,400. I think it would bounce from here. I don't even know if it gets there, to be honest. I think it's holding the 50-day, and I think that holds, and we'll go up and test a high before we break under 4,400.
Okay, I'll tell you what, that person would be popular around here. We have a number of folks that think gold is going to go higher here, including one viewer who's dubbed it King Gold. So I'm sure that that sentiment is felt. Okay, Dan, really good stuff here today. I know I kind of rambled a little bit there. I had some specific questions for you because we don't often have future-specific people on here. Is there anything else that you wanted to talk about that I might have missed or that you think is important out there?
Well, if I can shamelessly plug my webinar tonight.
Oh, absolutely. That's what you're here for.
For those of your traders who do trade futures on an intraday basis, what I use on an intraday basis is not like moving averages. I don't use RSI and MACD and all that stuff, which are very popular, and they can be helpful to someone who has a great deal of experience. But I've many years ago, I got a group of scientists and mathematicians together and built my own algorithms. So just to let people know that when I'm trading intraday, I'm using things like the regime switching algorithm and signal processing algos, just to really try and put the client and myself, of course, to give us an edge that is on the level of a high frequency trader.
Okay. All right. Awesome. Dan O'Brien uses his own proprietary algorithms to make fast-paced futures trades, and he's sharing how it all works in his free webinar. That is today. Really good timing here, Dan. 8 p.m. tonight. Go ahead and scan that QR code. All right. Dan, I appreciate it. I always enjoy Outlook here on the futures. Can't wait to follow up with you the next time that you come back. Have a great rest of your truncated week here, and we'll see you next time, all right?
Thanks for having me, Ryan.
As always, that is Dan O'Brien from T3. Those T3 guys are absolutely phenomenal all of the time. Really good breakdown there on some of the futures. Thank you very much, and thank you, chat, for welcoming him back here. All right. Really quickly, I have one more story, and then we've got a couple of tweets to look at, and then the anticipated return of 13. I see 13 out there in the chat already, which means he is diligently working to get those movers all locked in so we can break that all down. Now, really quickly here, let's take a look at one more story here. This one made me loll this morning. It was good to start your day off with a laugh here. Ross Gerber says Elon Musk's Tesla should sell the EV business to Rivian. Says Tesla brand has been reduced to, quote, negative. Oh, Ross. Funny stuff. Investor Ross Gerber, co-founder of Gerber Kawasaki, thinks that Tesla brand value has declined significantly as Elon Musk pivots away from the EV business to autonomy and robotics. In a post on social media on X on Monday, the investor shared that the EV giant's brand value had deteriorated. Quote, ultimately, the value of Tesla's brand has been reduced to a negative, end quote. I'll go ahead and throw this story here in the chat because it has a link to the tweet itself. And I'll be honest with you, folks, if you're not having a good day for whatever reason and you just need to laugh and you need to pick me up, do me a big favor. Click on that tweet and start reading the comments. You'll be in stitches in very short order. It's worth noting that multiple investors have expressed concern about the decline in Tesla's brand value. Kathy Wood, CEO of ARK Invest, sharing that Tesla's brand image has been impacted by Musk's political ventures. Meanwhile, Ross Gerber earlier hailed Rivian as a company that was, quote, leading the way, end quote, in EVs in the U.S. with the upcoming R2 crossover SUV, which is expected to be priced at around $45,000 for the base trim. Rivian said that the prices for the R2 would be announced on March 12th. So actually, in just less than a month, we have that coming up here. The R2 was also recently spotted in Fairbanks, Alaska, where it was undergoing cold weather testing. That's really good to see. The test vehicle was also seen charging at a Tesla supercharger station in the city. So let me know what you think here. Should Elon Musk say, you know what, I created this Tesla thing and we'll just get rid of it. We'll just sell it to Rivian here because robots and space. I got to say, I'll take the other side of that. No question about that. All right, folks, let's take a very quick look here at a couple of street tweets, and we'll go ahead and say good morning to 13. All right, first tweet here, and it is a good one from the Kobisi letter. Again, not affiliated with Benzinga, but I read this all of the time. And as a personal recommendation to you, you should follow the Kobisi letter. Investors are seeking more downside protection in big tech. The total value of debt being insured against default in major tech companies is up to $10 billion. Furthermore, the notional credit default swaps outstanding are up nearly 400% from the $2.2 billion seen just 13 months ago. Oracle leads with $6 billion, followed by Amazon at $1.7 billion and Alphabet at $895 million. Meta, which stands at $687 million, Microsoft at $521, and Nvidia at $220. For context, a year ago, credit default swap contracts on many of these names did not even exist. The AI debt binge is in full swing. So the question again, we've spent a lot of time talking about AI. We've talked a lot about, well, are they actually going to make something that's worth it here? What's going to happen? Are you worried about the credit default swaps? This is something that we discuss a few times, or I should say somewhat often on the Happy Hour channel. Do you think that there's more room for these stacks to pull back? Ultimately, what does this mean for the stalwarts mentioned here, like Amazon, Google, Microsoft, NVIDIA, and Oracle? Producer, next tweet. Next tweet is a simple one from Zero Hedge. We talked last week about the other shoe dropping. We talked about possible conflict in Iran and all of that, and didn't really get anything over the weekend, although the market is ripping here today, and I'm not sure why, so I'll be sure to check on that here in just a sec. But nonetheless, second round of Iran-U.S. nuclear talks ends in Geneva. This tweet was from this morning here. So we'll see if cooler heads prevail, if there's going to be more conflict, and how the market takes it all. But it sure looks like we're still kind of waiting what happens here with these talks with Iran. All right, folks, I don't see 13, so I can't go to that spot. I think I've got one more piece of news here until 13 shows up. Producer, can we go back to the... Sorry to throw you off there. One more piece of news here. Elbit Systems. This is ESLT. This is a stock that we've talked about infrequently, but as part of the defense sector, they're actually making some news here. $435 million in fresh defense contracts. The stock rose on Tuesday following the announcement of several contracts valued at approximately $435 million. The contracts, which include advanced defense systems, reflect the company's ongoing commitment to innovation and adaptation in a rapidly evolving market. The largest gain follows the company's January 26th announcement that General Dynamics Ordnance and Tactical Systems awarded a $228 million contract to supply its Iron Fist active protection system for U.S. Army Bradley vehicles, with work scheduled over the next 3 years. The contract awarded to Elbit Systems will span 6 years and involve supplying a range of advanced systems, including land systems and innovative defense solutions. The company reported order backlog of $25.2 billion as of September 30th, 2025, indicating strong demand for its offerings. The broader market experienced mixed performance in the trading day, with the Russell down. Sorry, that was just the regular market happenings here. Here's a look at I gotta get the ticker right. ESLT. We've taken a look at this several times in the happy hour. One of the reasons I was bringing this up is because with news of the contract, it actually looks like we might be on deck for a recapture here of the 20-day moving average. That's just about 700. I've got it at 699.13. And if that's the case, perhaps this 737, 740 area might make some resistance for a break to the all-time high. This is what it looks like on a weekly time frame. Of course, we have the round 700 number coming up there. This gives you an idea of how strong this stack has been when it's taken some of those legs up. All right, he's here. It's that time. Let's get you all set for the movers. Now we will start pre-market pulse. 13, good morning. How you doing, boss?
Oh, good morning. Feeling refreshed after a long weekend. Coming back here, trying to figure out what I'm supposed to do. You know, you ever come back from a long weekend and be like, "Oh, how do I do this again?"
All of them, bro. It's honestly like I struggle to think of downsides to extended weekends, but that's one of them. You just get so you forget just random things that you're in the process of doing. I woke up this morning and I was like, "Can I please just have one more day off? I love sleeping." But here we are, and we're ready to go. All right, I'm just going to go ahead and dive right in. We actually have a number of things going on here today.
Yeah.
First, most notably, probably this one, PLYX here. Now, when I first sat down here, I didn't see this one moving. So obviously a lot's changed there just to kind of set the stage. The stock is holding higher by about 70%. It looks like it's flat. And it looks like it's flat because it had an impulse move that took us up to about $65 and then bled everything back in the same candle. Now, the piece of news that I have here today, Polyarx Therapeutics selects contract research organization Soteria phase 2 basket trial. Now, I haven't gone through this, and I have not been able to have AI summarize this for me yet. We'll see if you've kind of looked into this. Let me just take a quick peek at some of the share structure for this stock. Okay, we don't have short interest info on this or float info. On average, the stock trades about 170,000 shares. It's traded 11.8 million here today. 13, I'll see if I can get a float figure from Know the Float, but what do you have here on ticker PLYX?
Yeah, my broker says the float's 47.3 million.
Okay.
So I'll just go with that for now because I couldn't get one from Pro. But yeah, they selected Contract Research Organization for their Soteria trial. And I don't know exactly what is so great about this, but I think because this represents a flexible and resource efficient a mechanism to continue the clinical development of their drug across multiple LSDs, which is the pediatric lysosomal storage disorders. That's what this is. Their drugs in reference to.
Mm-hmm.
I think it's because of that efficiency is why it's getting so much attention. Now, when we saw this movement up all the way to the 60s, it wasn't on like a substantial amount of volume. It was about, I think, about 130 something thousand shares, and that came right back in. And I thought this had really gone nowhere until I zoomed in a little bit and realized, okay, the price action is really just within the $5 range. So we did get a move up initially, but before that big impulse that took us up into the 60s, we were getting some resistance from the 350 area.
Mm-hmm.
Finally broke out of that, but when we came back in after that big move, that's where we found support, was in that 350 area. I'm going to screw that up. I just know it. That 350 area. Hold on, 350. Okay, so the 350 area is where that resistance came in. It's right about where the 65 EMA is, and now it's trying to recapture the VWAP. Multiple attempts happening here with this VWAP recapture. I would say that if this current candle that we're in cannot get back above it, I think the VWAP is going to reject the price and come back in to the 65 EMA, maybe lose some of these smaller EMAs. So got to get some volume going here to get through this VWAP. But even if it doesn't break out here and go up, it still has plenty of time before the open. We'll just have to wait and see what it does. But right now, it has to get above VWAP if we're going to go any higher at this moment.
Okay, and I have a couple of things here. So number one, the spike up to 66 even, I do have that in my broker. So as you outlined, it must have happened on low volume here. It does appear as if we've got another kind of a phantom candle right here, and I do not see this in my broker.
I don't either.
Now, the problem with this is that, unfortunately, it is causing the calculations of the VWAP that I'm showing here on the screen to be off, because I don't actually think this spike happened. So really quickly, just looking at my broker here, I've got a VWAP of 502. My VWAP in TradingView says 690. Again, that's because it's being miscalculated from some of these phantom candles.
I think I've got a solution for you. So to draw a horizontal line at 4, my VWAP is 402. But when I'm looking at with these candles here, trying to get over this VWAP, it also looks like they're trying to get over that $4 handle, because you can see there's no closes above 4.
Look at that
on the on any of these candles. So I think that, and we're trying to get through it right now. We're still hammering that VWAP, but 4, we need to see a candle close over that. I think that's going to be the indicator that we're still trying to go higher. But $4 horizontal line, I think that's what I would use if you don't have VWAP.
Okay, I think that you're exactly right here. I am not here to argue facts, as it's got to hold 380. Looking at the chart here, I would also think 360 would be important.
Okay, I see.
Hold that 380 spot.
I see that 380. Yep, because that was also where this one candle at 605 went up to and was rejected. That also looked like a bit of a resistance area. So yeah, I like that 380 as well.
Yeah, and it actually looked like that happened on a little bit of volume there. Okay, good stuff there. PLYX, odd looking chart. We'll see how that one shakes out here today. Now, the next one I have here is OBAI. And you might want to say that this is trading up on no news. I'm going to read you the news here. You tell me if this is important. TG17, which is the name of this company, announced a corporate name change to our brand and the trading symbol on NASDAQ to remain OBAI. That's the news that I have here today. Now, I do have Baiynd advances towards its largest enterprise web development date following a successful paid pilot with one of the world's largest employers. This was a PR from Friday morning. I don't know how much that plays into it. All I have here today is about the name change. The stock is up 105%. So heck of a thing there. I don't have any short interest on this. I'm actually going to have to check on that. But nonetheless, here's what we're looking at on the chart. We're beneath the VWAP. Let me take a quick peek at the share structure here. On average, stock trades about 164,000 shares. Today, it's traded 20.4 million. 13, what do you think on OBAI?
So this hasn't been around too long on the exchange. So I didn't have a whole lot of information that I could get from it, like in terms of how much cash it has or what its income is. But it's a very, very interesting company. I did a look a little bit into it. I read their website. I can see how this is kind of in the right, this is the right app for the right time, I would say. This is like a personal security app. So let's say you're going to the store, you're not sure about the neighborhood you live in. You hit this this company's app up, and can you ask them to keep an eye on you as you go to the store, or check it back with me in like 5-10 minutes, or whatever the case is. They'll do that for you, and they'll basically it's like having like a set of eyes on you at all times. So you're willingly being surveilled for your safety, if you wish. That's kind of interesting to me. And there's been news about for this company being used by some municipal government, a major municipality here in the United States. I don't think it ever said which one, but there's a whole municipality that's using this for security. I don't even know if it's the United States, but that was one of the most recent pieces of news. Anyway, very interesting company. Let's getting back to what's more important here. Does this company have cash? I'm not sure if it has the cash or not. I don't even know what the float is. Not even my broker knows what it is.
Yeah, and I didn't find anything on Know the Float either on this one, or on the last one, by the way.
So as interesting and as great as this company looks, I'm not sure about how it's going to trade today, because I just frankly don't have the data.
It doesn't look like it has a lot of cash, by the way.
No, it doesn't. But at the same time, like, this is still a new issue onto the exchange, and I don't know how much has been reported or not. So I really don't know if I can even lean on what we have, because it's so new, and I just haven't done the research on it. Aside from that, I would just go lean on the technicals here, and the 65 EMA we need to kind of hold up here, and we're right at it right now at 609. So if that doesn't hold up, then this probably comes down to, let's see here. It looks like if it loses the 65 EMA, we're going to be testing 6 as the next support area, which it'll probably lose as well. And then you have 555 and the 200 EMA beneath that as support. So
Jay here mentioning that this was $38 2 weeks ago. And when you take a look at the daily chart, you can see exactly what this thing looks like.
Right, because there's an IPO.
Yeah, this one, I would be very, very careful with this one. This is certainly not one that I would feel safe holding overnight. You did a good job with some of those intraday spots, 13, if we're able to hold that 555, 6 here, and then 555 next, I would say is what I see. So, and
that daily chart should tell you everything you need to know about whether or not you should hold this or not. I think you don't want
exactly to. Right.
Could it provide a trade? Sure. And once this chases out all the people that were holding it, and they get their piece, and this finds a bottom, then maybe this will start to trade better. Maybe when we also get a better read on their financials. But just looking at the company, looking at their website, and looking what their product has, very interesting. I think this might have a future. We just need to let this whole IPO sell-off shake out.
Okay. All right, good stuff there. Next on the list, I've got GVH. This is Global Holdings. Looks like this is ramping right now. Stock closed at 92 cents on Friday, so this is a penny stock until this morning. Looks like we're trading higher here on pretty good volume, at least for this stock. All right, we've got a couple of things here. They report strong 2025 financial results with 42% revenue growth. Looks like we had a 13G for L1 Capital. Looks to be taking a stake there. And yeah, they had full year EPS of 1642, sales of 18.58 million. That is driving the stock higher by about 65%. Take a quick look at the short interest here. Finally, we do have a read here on this, but it's fairly negligible. 1.36% of the float shorted with 1 day to cover. On average, the stock trades 408,000 shares, done 5.4 million here today. Float on this one is 2 million, so right in the wheelhouse. 13, what do you think here on GVH? I know it's spiking right now. What do you think on GVH?
I think you got a little bit of some of this news on Friday because this company had delayed their 20F filing, and then that was back in January on the 28th. And now 2 weeks after that, you have on Friday they submitted that. Didn't move then because now it's moving on the fiscal year EPS headlines, which I'm not sure that if it was in the 20F or not. But I think the fact they filed that 20F on Friday after the market or that news came up after it had already closed, I just don't think it was noticed until today. So maybe just a bit of a delayed reaction here. As far as where this goes, let's see. Oh gosh, what happened to this thing at the end of the year last year? This thing took a big old nosedive at the end of the year. I don't know why. I didn't cover this one, as you can tell. We're coming up to actually to where the highs following that drop were, which is about 160. You can see that from the January 7th high. Since then, we haven't been up there, and that's where the price is kind of topping out at. So if we can get up there, there might be a bit of a run we could go on, but I don't know how great this is going to be. I didn't cover this one, unfortunately.
Yeah, no, this looks like pretty decent, pretty gappy in here, right? And that looks like that's all the way up to 260. So pretty good spot there. All right, we'll see on GVH. Seems like kind of a junker here. See if we have any better opportunities here today. Now, next one here, this is Gaxos AI. Ticker on this one is GXAI. The stock closed at 105 last week and had a move up towards 2 earlier today. We've given that up, and we've actually given up the VWAP here. Let me turn these moving averages back on because they actually might provide targets for us. The stock is still up by about 45%. We did an exclusive news here this morning. Gaxos signs a deal with Byte Plus to receive preferred pricing and discounts on ByteDance's video generation models. Terms have not been disclosed there. Basically teamed up with TikTok parent ByteDance to supercharge its AI video tools. Y'all should let me know how that goes if you use this. Quick peek at the short interest, 8.13%. So there is something here, although it's not high. And 1 day to cover. Should have no trouble covering all this up. On average, it trades 5.3 million. It's traded almost 48 million here today. Float on this one, 8.4 million. 13, what do you think on GXAI? I think we get another upside trade here today.
We traded this last week, I thought, didn't we? Or maybe it was a week before. We've traded this recently. So I don't know that a whole lot has changed since the last time we traded it. Still seems like they aren't quite profitable yet, although they aren't losing a substantial amount of money. It's often around $1 million a quarter. They've got enough in short-term investments they could turn into cash. So not sure if they're going to need to raise capital, but there's always that risk with stocks like this that have no cash on it, or a little cash on their balance sheet. So if we can hold this 150 area, I think we might be able to see some more upside. But if we can't, this looks like it's struggling to recapture the VWAP. We already got a rejection about 15 minutes ago. So I think if we cannot hold above 150 and try to recapture VWAP again, this is probably coming back into about 135 would be the next support area that I see. So.
Okay. All right. Good stuff here. GXAI. I'm going to keep moving along here because it just doesn't really seem to be a whole lot with some of these little movers, and we can get to some of these bigger ones here. Now, the next one here might be interesting for you, and I'd like to get your opinion on this if you're taking a look at it. Zim is being taken out. So this is one that we have talked about quite a bit. I know when we first started trading this, I think it was in a 12 to 15 handle initially. We were trading it back and forth there. This thing getting bought out at $35 now. Zim Integrated Shipping Services are trading higher as the company announced it will be acquired by Hapag-Lloyd. I believe that price is 35.
Yep.
It's currently sitting right here at 30. So, okay, so no trade here, but 13, do you have any thoughts on this one?
Hey, no, great. I mean, if you're still holding this, and you follow the news, because I wasn't closely tracking their
okay, that's fine. I just wanted to make sure if there was anything on here that we'd cover it. This is a buyout, though. Congrats if you had it. Congrats if you held it.
It was great for trading, and if you held it, you've been rewarded. Congratulations.
Yep. Okay. Now, two more on here that I did want to talk about. This first one here is going to be CMPS. This is Compass Pathways. Stock is up 33+% here. Looks like it's just shy of 8. Let's take a look at the news and see what's moving on this one. As of today, so reported Monday, actually, Compass Pathways to report new clinical data from its ongoing phase 3 trial of Comp 360. This is a psilocybin treatment for depression. It looks like they successfully achieved their primary endpoint in the second phase 3 trial. So we're getting some good news for that. That's driving the stock higher. I know the psychedelics and cannabis have their own fans, if you will, or people that follow it. So short interest on this is 6.76% of the float shorted, 5.02 days to cover. So there actually is kind of a significant amount there. Stock looks like it's trading higher. 13. What do you think on this?
I didn't cover this one, but being that this is this is an ongoing phase 3, so that's going to be one of the more expensive ones. Probably, if it's still ongoing, then it's likely still consuming cash. I was just looking real quick at MindMed, and I can't believe my eyes if this is what's actually happening, but the chart looks identical if that's the case. It can't be the same thing. It must not be switching or something. Anyway, or maybe MindMed doesn't even exist anymore, but it's still coming up for me. Anyway,
MNMD, right?
Yeah, I just wanted to see if there was any relationship there. Right now, it looks like this is trying to get back over 8. Sorry, I'm just kind of all over the place with this one right now.
No, MindMed doesn't exist anymore.
Okay,
MNMD. That's why you're having that trouble.
That's why I'm having that. Okay, so it just was coming up for no reason. Anyway, looks like $8 is the next resistance area. We've been trying to get above and hold above that for pretty much since the after hours on Friday, but we got rejected every time. Couldn't close above it. This morning we did pop up. No, I'm sorry. That was all this morning.
All this action has been from the
could not get. So $8 I would just kind of peg as the big resistance area. We have not been able to really close over that except for one 5-minute candle. That's the resistance area that I'd be keeping an eye on. I don't have a whole lot more I could add to this, unfortunately.
That's okay. I just like I said, there's not a whole lot of really good stuff here on the list. Okay, one more that I have to go over. That's going to be what?
I said, okay.
Rhyme. Now, this is interesting. This actually started moving on Friday last week in the afternoon. So if anyone was still around Friday before the 3-day weekend here, you did get rewarded because this thing moved on crazy volume on Friday. You can see exactly what happened here. This squeezed, closed at about 348, and then actually went to 6 in the after hours. Now, today, the pre-market looks like we've run into 5 here as resistance. We're right beneath the VWAP, right? Yeah, 452 is the VWAP. Okay, so we were just right beneath the VWAP, and we've just moved higher through it. Now, let me take a look here at the news for Rhyme, and we'll cover this from last week. So, again, they had a Form 13G as of today, and they define the semi-cab vision, a smarter connected freight network built for the AI era. So I haven't gone through this yet. This information obviously was not out on Friday. Now, on Friday here...
I got you. It's Thursday.
Thank you.
Look at. It's Thursday. If you look at what happened on Thursday, that's when the real news came out, about just short of 11 a.m. If you look at the chart, right about that time, we got a huge move up. We tried to get above that... what is this, like the 155 area?
I see it.
All day that day.
I got it. Yeah.
Even into Friday, we were trying to get through that. And then finally at 115-ish, right around there, we finally broke through and started taking off into the after hours.
Okay, thank you. So that's exactly what's going on here. Now, there was something here really quick. A. McCormick was asking, did we take a look at Rhyme here? Now, this is coming from one of our chatters here. I did the DD, and their white paper covered an India trucking study, and I want to short it. So, okay, so what I would take away from that is that you might want to kind of look into this a little bit more if you want to trade it seriously. Otherwise, I would probably just use the technicals for this one. Given the squeeze that we saw at the end of the day Friday, Maybe there's another bounce in here, but here's what I'm seeing, 13, and I'd be curious to get your opinion. I'm seeing this. Excuse me. I'm seeing a series of lower highs here. This sets up a trend line that we really need to get through. And I'm also noticing that the volume is declining. So if we do not get volume like we saw here on Friday, I'm not sure this has a big move to the upside. What say you?
I think the move that we're seeing here today is on relative volume.
Okay. That would make sense to me.
So there could be some upside. Do we get above 622, the high from Friday? I don't know. I'm inclined to believe that maybe not, but here's some things that I would watch for. First of all, we need to recapture VWAP. The second thing we need to do is we need to get above 535. I think that's the one of the bigger resistance areas we're facing right now. If we can do that, then we certainly can get up to the 6 handle, maybe even 622 high. But I would say those first two things need to happen: the recapture of VWAP, and then getting up to that 535, which would also include a break of that trend line.
Okay. Gary here saying Rhyme was recently a karaoke company.
And they do what now?
Algorithm Holdings. I mean, I don't know if that's the case. I'm wondering, Gary, are you making a joke because it's called Rhyme? You rhyme in songs?
No, he's probably right, because it's a consumer electronics holding company. I mean, it could have been. I don't know enough about this company to know. I mean, the singing machine. It was the singing machine company. So he's right. Okay,
so cool. Karaoke company, now semi-cab vision, freight company. Okay, good luck on this one. Did go crazy on Friday. We'll see if we get a repeat here. But all right, what else do you want to take a look at here today?
Whatever y'all want to look at.
All right, let's go back. Oh, I'm actually going to stay. No, let me go back to the big chart here. We should probably mention the Norwegian Cruise Lines news, and then also the saga is just not ending with this Netflix Warner Brothers Discovery stuff. It just really is.
They have 1 week. They have 1 week to make another offer.
Okay, well, so we're going to start with Netflix's chart. And again, I want to didn't make any money off of this, but I want to take a victory lap on this because I got asked almost every single day what my thought was on Netflix, and it literally hadn't changed. And the thought here is, can we please wait for this saga to be done? Because 13, you did a really good job outlining how there's a number of regulatory hurdles that it might need to get through whenever this happens. But man, oh man, can we please wait for this to really kind of shake out before we figure what we're doing here on Netflix? Yes, we're down back into a consolidation area. We talked about 75 being the next possible level. I think we also talked about 70 and then maybe also 65 as being other levels, just kind of looking at levels here. But apparently there's another meeting and there's another offer here. So Warner Brothers Discovery sets a special meeting date of March 20th and unanimously recommends shareholders vote for the Netflix merger. Apparently, there's more stuff here with Warner Brothers Discovery and Paramount. Warner Brothers apparently is rejecting Paramount's latest bid, but gives Ellison's firm a week to submit their best and final offer. This is what you were talking about. So I turn over to you. What's the story here with Netflix?
Oh, it's everything you just said, but I still think we're going to 70. And it's interesting, too, because all of this downside is kind of pricing in the expected downside from the weight that we're going to have to experience as this regulatory process goes on with this after, once the shareholder vote to merge is done. And as was pointed out in chat here, that's going to be March 20th. So still a ways away before the shareholders even vote on this. But it's because, there's being time given to Paramount, Skydance to make a better offer. So I would, at some point, there's going to be an area where this doesn't go any lower. It could be around 70. And I think that might have, at that point, might have priced in a lot of the downside that would be expected or anticipated from this merger anyway, because that is cash, a lot of cash, leaving Netflix as a result of this purchase. So I still think it's coming to 70. But once we get down there, let's take a look and see what we end up getting if it's starting to look like it's going to bottom, or if we just fall through it and start marching towards 60, which is the next area I'd be looking at.
Going all the way back through 2025 and 2024 into the end of 2023. I have a volume point of control down here at 61.46. I think if you have a long-term view on this and you're looking to dollar cost average it, I don't really think it makes a difference what the different levels are here today. Because you're probably just going to add as the stock comes in. And when it finally finds the bottom, you'll probably add again. If you're actually trying to time this bottom, then all of this stuff is going to be important to you. And I'll be honest with you, I kind of see this a little bit lower. I think I'm in agreement with you. I wouldn't be surprised if 70-ish, maybe even 65 represents the bottom here.
See, Joe, that's kind of what I'm starting to wonder now is with all this downside that's been happening here since the announcement of that deal, is this going to price in any anticipated downside that would have resulted in that from that merger anyway? That's kind of what I'm wondering if we're going to see a whole lot more downside following the shareholder vote, which, is still over a month away. So could it still be some more downside, but I would kind of think maybe not as much as there was before.
Okay. So the more we come in, perhaps the more limited downside we have. I will say when this really starts to kind of slow down and hold, or when we get some bad news and the stock doesn't really go down at all, that might be the signal that your bottom is in. We can also take a look at analyst ratings and see if that changes here, but I'm just not in a hurry to try to pick the bottom. For example, if the bottom on this stock ends up being 75 and I end up purchasing it at 81 for the long term, am I going to be crying over that? No, absolutely not. Okay. Yeah.
ArgueFacts also mentioning CMPS is trying to get through 8. Just wanted to point that out if you're still trading before we open here.
Okay. I'll do this real quick and then we can just move over to the main workspace and be ready. I think someone else wanted to take a look at Rivian, so maybe I'll have you give some levels. Okay. While we do that. But let's first take a look at NCLH here. EKS brought this up earlier. Jay was talking about this too. Norwegian Cruise Lines are trading higher after reports suggest that Elliott Investment Management built a stake of more than 10% in the company. They do want to force changes here per that story. So that's what's going on here with NCLH. Looking at this is up 6%, 2283. I mean, realistically, this would need to get above 25, I think, to really kind of turn things around here. Jay had also said the activists are going after low-hanging fruit like FSIV, NCLH, and then TRIP. So that's what's moving Norwegian here. I would guess, I would ask I don't have a position on this. I'm not interested in any of the cruise lines. Jay, EKS, Izzy, anyone else out there? 13. Do you have any thoughts on NCLH here at all? And while you go over this, I'm going to leave it on the daily. I will be right back. We'll do Rivian next. Okay.
Okay. The only real thing that stands out to me is the fact that since COVID, when we had this drop here in NCLH all the way down to under 10, like what is it, 730. We have not recovered from that level. We have not recovered from the COVID drop. The price has been compressing since then. We had this rebound that took us back up to 34 in 2021. We haven't been that high since either. We're just continuing to compress. That makes me nervous about this one. I mean, if we can't recover, what's hanging this back? And I don't know enough to understand why it hasn't recovered, but it looks to me like 34 was a big resistance area following that drop. If you look at August 2016, that's where the price was after, and then it rebounded. But when we came back here during COVID, we fell right through it, and that has been the resistance level since. We've only tested it once, but that's been the resistance level, and I don't know what happens with this next. I'm inclined to think that this goes lower, but I just don't know. You have the 500 week SMA at the 3150. That's going to be a resistance area. I mean, there's just not a lot that I like about this chart. So maybe there's something that's telling everybody something differently in the fundamentals, but I just don't like the way this chart looks. Did you hear my explanation about the compression?
I just got back. No. Are you talking about this price compression in here?
Yeah. So you go look at a weekly, you'll probably see it better. So following the COVID drop, just look at the price action compress.
Yeah.
Mm-hmm. And if you can even draw a horizontal line at 34. Draw a horizontal line after you do that. Yeah, draw a horizontal line at 34, back out, and just tell me what you see.
Yeah. Come on, Ryan. You got to click faster. This is terrible. I see that 34 support getting broke, retested to the upside, and no bueno, and now we're compressing under it. That's what I see.
Yeah, so there's one resistance area. The 500 is going to be another. That's a 500 week. I just not excited about the way that this chart continues to compress. We have not been able to recapture the levels from pre-COVID. It's sorry if I'm not here saying what anybody wants to hear, but I just don't like this. I don't like cruise companies in general, but I just don't like the way this chart looks.
Me either. Bob here. I gotcha. NCLH CEO was fired on Friday, and indeed, John Chidsey was named the new CEO here. JP Morgan also downgraded it to neutral and lowered the price target to 20 on Friday. Bob says, and actually Bob yelled that he was terminated and he was terrible. So there you go. Okay, not a fan of cruise line stocks either. Neither am I. Okay, we've got 3 minutes till we open here. We did have a request earlier in the chat for Rivian. I know, 13. We can never get away from the stock, it seems. Okay. But here we go. You have, I think the request was for the Rivian chart. So looking for spots here on the chart. The one thing that I will start off with here, 13, is that we hopefully the stock has put in a bottom here around its 200. We broke beneath it. We tried to recapture it. We actually battled with it for a little bit, lost it, but then with the recent earnings here, we've actually popped through it. Now, we used the 50-day as resistance. So 1757 is that. Let's just call it 1750. This is a resistance area that we've been at before. I would really want this to hold above this area. These are actually some previous peaks here. Yeah, about 1675, 17. Really, to me, this needs to hold 17 here today. Otherwise, we are looking at a possible gap fill to the downside and a move back down to that 200. So you tell me what you see on the chart here for Rivian.
I like that 17 spot. I also like 16. I think those are the next two support areas that are going to keep the price up here because we did close above the 50-day SMA last week, and now here we are opening beneath it. Not a great start, but if we recapture it, I think that would indicate that there is some more strength to the upside. You do have this gap from January 14th and 13th. That could be filled. It looks like it failed to get filled on Friday. So if we do manage to recapture the 50-day SMA, that's what I'd be keeping an eye on, is if we can fill that gap, and that would take you to about 1880, I think. On the other hand, if we cannot recapture the 50-day SMA, then those 17 and 16 levels are going to come into play, as is the 20 and 200-day SMA.
All right, perfect timing. You literally stopped talking right as the bell rang. I don't know if you could do that any better here. Let's flip over to the main workspace. Someone was asking me said that there was some Ondas news here today that came out after the open. Let me take a look at that. I didn't look at that. I'll do that here real quick.
Everything down. Sorry.
Okay, that was easy. Okay, everything down. Normally we read through it one by one, but in this case,
yeah,
everything was down.
Everything just immediately out of the gate just started moving down. Some are hitting some support areas. Like the CNPS went down to VWAP. Rhyme is it went beneath the 65 EMA. We haven't closed beneath it yet, so it may be losing it. We'll see. What else do we have here? GVH, on the other hand, that reversed and starting to push up here, trying to take out these sellers at the 160 area. Trying to choose them right now.
So really quickly here, my read on the Ondas news. Again, this is a positive. This is part of the entire long-standing thesis that we have here for this being drone defense. This looks like a deal here with the German police force. Yeah, German state police office. The milestone reflects both Centrix's growing role in European law enforcement and rising demand for lawful, non-disruptive drone mitigation. Remember, we just saw the El Paso airport close for potential drone issue. I would imagine that we would see more pieces of news just like this. Now, Ondas here is down 2.26% as 13 covered. Everything was down out of the gate there. I also didn't notice any numbers in this PR, so this is just kind of a mention that this is proliferating here. And I would imagine, let's see, based on the market, our Ondas estimates that the 5-year total addressable market for handheld counter UAVs systems to be 9.8 billion globally. So they're just telling you how big the TAM is here. No specific numbers in there, but ultimately, this is a positive. This is exactly what we're hoping gets wrapped into this book of business. Joe, I'm sorry. I don't know how big the contract is either. I would actually need numbers. I don't know that I'd be able to accurately guess that, as I'm not familiar with the German State Police Office. But nonetheless, that's what it is.
All right. So OBAI down to the 200 EMA. PLYX potentially losing its 200 EMA. GVH, after that pop above the VWAP, that thing is just absolutely cratering right now. This looks like it may end up going even lower.
You said that was GVH, was that?
Yeah, it was GVH. GXAI, on the other hand, this is getting some support from the 150 area, trying to push up above the consolidation from the pre-market. Might get up to 175. We'll see if it can.
Okay, so GXAI, let's see. We're looking for a possible break higher here.
Yeah, maybe another
165 looks to be that spot. 166 is the VWAP.
Yeah, and it looks like it's trying to make its way up towards 175, which could find some resistance in that area. Need to see some better volume out of this one, but it is.
I'll tell you what, just as like a day trade here, I don't feel great yet about buying upside breaks really in any of these names. So this would have been a decent load a little bit lower. If it snaps 165 here, it'll do it without me. I don't feel great about it. Here it is, 165 up. They just took it. There it goes. That's all I had to do was say I wasn't going to buy it, and you're welcome, guys. It moved it right through there for you. Now we'll see if 166 can fall. I've got 167 as the VWAP in my broker.
CMPS trying to go as well. This might make a run up towards 9.
Okay, so these are both going there, and there's GXAI. WIS, that was a good call, man. I was a little bit late to that. Really good call. It did go through the 165, 170. Looks like it stopped it. Good stuff there, though, WIS.
I don't know if CMPS is going to do this, but we have a bit of a trend. That could give us a target here if we use the wicks from the pre-market. I have no idea if it's going to actually get up there. But if you draw a trend line from the 450 high and the 625 high, that would give us a target of about almost 11.
I see. Okay, so it's just these two. Got it.
Yeah.
Sorry, it took me a sec there. Still on President's Day mode, I guess, but that's what it is. NCLH, this is one that you guys were talking about earlier. This is the cruise line. So it looks like we did go above the VWAP there, but we're battling with that right now. INFY, we talked about this news earlier. This came back in.
Rhyme lost 65 EMA. It's headed towards some of the pre-market lows. If it can't get support there, it's going to hit the 200 EMA. And then after that, I think looks like 285 might be your next support beneath the 200 EMA.
OLB here, this was a penny stock, so we didn't cover that earlier. This is up 100%, up 42%. The OLB group announces a global partnership with PayPal, LOL, to enhance secure payment gateway platform and accelerate digital payments for small and mid-sized merchants.
Looks like GXAI running into some resistance around 175. But if it can hold above this this VWAP and all the consolidation it just moved through, I think this could go higher. We just got to hold above that consolidation.
Okay, so really quickly, the OLB news here. Through this partnership, OLB will embed PayPal's branded checkout and related services, which includes Venmo, directly into its commerce and payment platforms, giving merchants the ability to accept PayPal with minimum technical lift while benefiting from PayPal's trusted brand and global reach and fraud and risk capabilities. Okay. Wiss, you asked me for my thoughts. My thoughts are that this stock has traded too much to the upside. I don't know I don't know how much more business they're going to be able to attract by having this PayPal integration. So it's definitely good news on the surface. Is it worth 100%? Is the company now worth twice as much because merchants can use PayPal or Venmo? I don't know the answer to that. My gut would tell me no. Looking at the price action here, we're right at the VWAP. Now, curiously, PayPal is actually up 2.26% today. I'm not sure if this is just a beaten down name that might be a little bit of a regression back to the mean as it kind of chops around down here. I'm skeptical to think that micro cap is actually affecting PayPal's move to the upside. Now, this might just be ignorance here. So if you guys know more about this and the system, let me know. But to me, it seems OLB a little overdone on this news.
If you go to a daily chart for PayPal, since we've gapped down, there's a trend line you could draw from the highs since that gap.
I see it.
And we're right at it today. So,
oh, you know what? I must have this. Let me hide some more of my stuff here. Yep, I had that wrong. Let me get that 13. I'm going to get this. I'm going to get this right on here because I see exactly what you're talking about. Come on now. Come on now. Here you go. So this is the trend line gap that you hope to break.
Yeah, this if we break this trend line and we can hold above it, then the gap. I don't think the gap will fill. We're going to probably go up to the 20-day SMA and find resistance there first, but it's just something to keep an eye on. If we snap this downtrend, we might be putting in a bottom.
Okay, I've got that value at just about 41.50. By the way, folks, that's for PayPal, ticker PYPL.
Wiss is watching PLYX.
Boy, I really wish that I could ignore this candle here just so I could see the price action a little bit more. This looks like it's getting rejected at its 15 EMA to me.
Okay, so you already looked at OLB, right?
Yeah, that's I was looking for that on Wiss's mention.
Just cycling through some of these other ones. CMPS now giving back everything it did out of the gate. Rhyme coming down to the 200. GXAI, this trying to push into the 180s.
I'm seeing light repeat call buys here. I have this denoted as 2 entries. Looks like trader was buying the 610 calls that expire in June. Looks like 2 sweeps, one of 174, one of 175. It's notable because these are 2 million apiece. That's LITE 610 is the strike, June is the expiry. No position for me, just reporting it off the scanner. PayPal's working for you. Well, Jay, I'm glad it's working for somebody. Up and GXAI. So told you guys earlier, don't feel good buying the breakouts. We got a little bit of a tease there as GXAI went through the VWAP and then pulled hard here. This is exactly the type of stuff that I am trying to avoid. If this holds 150, maybe.
Lots of sellers at higher prices. So just be careful.
Yeah, and I would think if it doesn't hold 150 here, I'm thinking 137 to the downside is your next spot there.
Not a whole lot that looks great this morning.
And Wiss here saying stop loss hunting, and that's kind of what I'm thinking here, and that's why I'm really wanting to know, does 150 hold here? You know what? I actually have this as 151 just to be accurate. I am almost wondering if there are stops right beneath that day low or that pre-market low there. Here we go. We'll see what happens here at 151, 150. That's GXAI that we're watching.
Looks like GVH after shaking everybody out is trying to find some support down around the 115 area. So if this is going to turn around and come back up, 130, I would say, is one of the big areas it has to get back above.
That 9 EMA is right there at 128. So maybe.
Looks like CMPS is also trying to come back. It's a little, little morning shakeout here, and then we'll start ripping.
Also noticed oldie but goodie here, EYPT. This is iPoint. This was a great trade a number of years ago that originated as a happy hour idea. Looks like this had kind of an interesting day here. Sold off to below 11, and now it looks like we might be challenging 15. 14 and change is your high there. Had a new PR here that it reports inducement grants under NASDAQ listing rules. So, okay, that's the news here. EYPT up 8+%.
Yeah, 15. That's a big level to get above. If you
if
you look to the left, that's been a site of rejection in years past. Now, I think when we were we traded this, I'm trying to think of what year it was exactly, but I'm pretty sure it was in 2021 when we traded this one time, and then we did it again in 2023. I don't think we did the 2024, although I could be wrong.
We were all out by the time this thing went to a 20 handle. At least I was. Initial buy on this was $6.
So yeah, this thing is. I wonder if you could do a trend line here.
Well, I'll tell you what. This 19 inch. I'm gonna mark a couple of these levels off because I suspect we're gonna come back to this bad boy at some point. Let me mark this off. This area here, 19-ish. This seems to be pretty important, and then that 15 level that you had outlined, that's definitely important. There you go.
Look at a weekly chart.
Got it.
You'll get a nice trend line.
Yeah. So here we go. So
yeah.
Are you talking about this one right up here from December of 2015?
Well, there's a price action that goes back to 2005. I don't think that you've got it.
No, I don't have it here on this one. Okay, I'm just going to go with this chart because this actually makes a really nice triangle.
There you go. There it is. All right. Back to what's going on with these movers, which is in a lot of cases not a whole lot.
Yeah, let me check let me check the memory names. Rhyme, okay.
Halted down after losing the 200 EMA. This probably needs to add a G to it. We can call it Grime. It's gross. GVH, this is also coming down towards the 65 EMA. I think that's where it's headed. OBAI, that's not doing really anything except lose levels. Oops.
All right. 13, it looks like we've got a little bit of a lull here in some of these movers. I know Apple's up a little bit. Some of those financials traded up. We do have an all access here today. It's very short. Oh, Bitcoin is actually pulling right now. So, okay. So we're going to let some of this stuff settle. Let's run that all access here real quick, and then we'll be back and we'll check in on all of these movers here. So I'm going to send you over to all access right now. We'll bring you back on here in just a sec.
All right.
Hey Zingers, and welcome back to another episode of All Access. Today, I'm here with Lewis Black, Director, President, and CEO of Almani Industries, a leading Western supplier of tungsten, ticker ALM on the NASDAQ. All Access starts right now. Hey, Lewis, welcome back. How are you?
Hi, Ryan. I just want to point out we are the leading supplier of tungsten in the West, not A. A implies multiple of us. There are very few of us that survived the last few years, and we are the last credible man standing. So just to clarify that, now I'm back. I'm all yours.
Perfect. Sorry for making the mistake. I am glad that you clarified that. And you would be the perfect person to ask these questions to. Since the last time you joined us, prices for tungsten have continued to surge. What's been behind that at the start of 2026?
Well, I mean, the naysayers who feel they understand markets saying, oh, it's because China's restricted exports. In fact, it's much more dynamic than that. There is a genuine, legitimate supply squeeze on both sides of this journey, both in the East and in the West. So China reduced their subsidies and removed them entirely last year. We saw at least 5 mines close. Every year, they've been reducing 3% less each year, but increasing their demand by 15%. And of course, in the West, we haven't had any real tungsten mines except for ours for a generation. So it's ultimately there is a legitimate supply squeeze. And I think most importantly is to remember that the price of tungsten has been held in a narrow band for 30 years with the Chinese subsidies. This is the first time the price has actually breathed in the free market. So we don't really know where it's going to settle, but this is the first time it's really had its own life. And I think that's a very important thing to remember. We've unleashed it. Let's see where it goes.
Okay. Now, do you think that this pricing increase is sustainable throughout 2026?
Well, I suppose I mean, for my customers, anything between sort of 0 and nothing is too much. So, but ultimately, in terms of its uses, you use very little of it in the end process. And so therefore, it doesn't really have an impact on end use margin. Are these prices sustainable? We don't really know, as I said, where they're going to settle. I would say that ultimately, this current price has not generated the type of outrage I would have expected from my customers. I would say that if we continue to accelerate upwards, outrage will begin to appear. But until we see genuine outrage, I think this price is very much sustainable.
Okay, maybe we should avoid the outrage. Production in tungsten is set to explode in 2026 thanks to the addition of the company's Sangdong mine in South Korea. Can you tell us about where production was at the end of 2025 and where it's forecast to be in 2026 and the role that the Sangdong mine plays in that?
Well, I mean, in a perfect world, the idea was Sangdong was meant to follow on straight after our Los Santos mine came to the end of its life. So we were going to pick one up. But what we didn't ever understand until more recently is in the last 10 years, getting mines built in democracies through bureaucracies is much more laborious than it used to be, because bureaucrats essentially don't like to make decisions, and therefore you have to gently ease them to the end. So we've had that disconnect. Last year we only produced 750 tons of well, it's the most valuable form of tungsten in the world. It's paid significantly above market for it, but this year we'll produce on a run rate roughly around 3,200 tons. So it's a significant jump with Korea, but Korea was formerly the world's biggest tungsten mine anyway. So this is no surprise to anyone in the sector. This is why so many, from tier one project finance lenders to hard floor contracts with no caps on the upside, that's why they're involved in this project, because it was always seen as the very special, very unique project that existed still in the West.
Okay, now speaking of uniqueness, Almonty bills itself as being uniquely well positioned to fill the supply gap after China for tungsten. Why is that?
Well, this is a very difficult metal to mine. It's as dense as gold and as brittle as porcelain. And every mine that's opened in the last 15 years that we haven't owned has gone out of business. It is a very particular level of human capital that's required. And we have 5 generations of knowledge of how to do this. We are really the only resource governments have to actually even get data for how to design a supply chain. So we're very much on the inside of what's going on with the United States government. And they have got us working on some fairly, extraordinary things. I mean, ones that we haven't seen anyone else actually working on in any other sector in metals. And that's because of this uniqueness that we have been around a long time. We've been around a lot, long before any of these other more Antipodean junior miners have arrived with their, stuffing the quarters and looking glamorous. And we'll be around a lot long after them as well. It's just, ultimately, this is what we do very well. And I think we've accelerated some programs we were going to leave for a decade now into this year, which will also be discussed, obviously shortly with the market.
Okay, now prospects for Almonty look bright in 2026 and beyond. What are you most excited about?
Getting a good night's sleep would be nice. and how, I mean, listen, building in democracies is a miserable journey. It's what you sign up for. But ultimately, it's a good thing because you have something which has, great security and the law of the land. It's transparent. But we're also looking at something I never thought I would do at the request of USG, which will be, as I said, revealed shortly. And I'm quite excited about it because it's a lot more, I say, authentic, if that makes any sense. I've been in this a long time. I remember what mining was like 20 something years ago. There was a camaraderie to it. There was a brotherhood to it. In this modern day and age, with ESG and obviously the paperwork and compliance associated with it, it's much more methodical. There's a lot less room for creativity. So what we're working on now, that's what's exciting me.
Okay. Well, I'll tell you what, the journey is exciting me too. And Louis, we really appreciate you joining us here today. Thanks for your time.
Thanks, Ryan. Thanks for having me.
No problem. That is Louis Black, Director, President, and CEO of Almonte Industries, ticker ALM on the NASDAQ. Thanks for joining us here today, folks. And I look forward to you joining us next time on All Access. Man, I don't know if that was choppy for anyone else, but that was super choppy for me. I will say he's absolutely hilarious. Not the comedian, but he might as well be the comedian. Louis Black, really good stuff there from Almonte. Okay.
Thanks for addressing that, because that's what I was thinking when I saw the name.
Yeah, no. And so when he first got on there, when we were doing the recording, like, he is absolutely hilarious. He had me, yeah, he probably couldn't tell because I was trying to be professional there, but he had me in stitches the entire time. And I deserved the ball break, and then I got at the onset there. Nonetheless, GXAI, I wanted to talk about this. Take a look. Said if that 150 doesn't hold, it's probably going to the 200, or excuse me, to the 65 EMA. Lo and behold, this is what we got. So, are we able to settle here at 137? Looks like it's trying to bounce from this. Maybe there's an opportunity here. GXAI, though, really, we talked about that 150 breaking down, and that's exactly what we got.
And it's now resistance, and there's absolutely stacking up more and more shares at 145. That's going to require a lot of volume to get through. Doesn't look like it's going to happen right now. We're going to need to see a lot of that's going to have to get taken out if it's going to come back up. Now it looks like it's gone. I don't know if they just moved it elsewhere, but there's some sellers trying to push this down, it looks like.
Right. GXAI. Let's roll through some of the other stuff that we have here. OLB, this did go through the VWAP there. So I said earlier, I didn't understand why that was up 100%. Here we are up 115%. That's fun. Looks like some of the short ETFs are getting some play here as we had a big reversal in the market. We were weak in the pre-market. We ended up spiking right at the open and out of the open, but here we go. Looks like we're going to look to close beneath that 100-day moving average yet again.
Yeah, it's not looking like it's a very strong day so far this morning.
And I have no trades executed here today. I didn't. Maybe this GXAI, if it can bottom out here, but I'll be honest, I don't feel great about any of this stuff here.
Yeah, it's come back up to the 150 area. It's going to need more volume to get through it. I don't know if it's going to have it. And just looking around, and nothing else looks particularly great right now. And then Bitcoin was getting mentioned. That's still looking weak. It looks to me like this could still come underneath 65. I don't know how low it's going to go. Did we get to 60,000 even when we bottomed? We were like a little more than $70 into underneath 60,000.
Yeah, and I would agree, Matthew. That SPY looks nasty. Look at this 5-minute candle. Just looks like a kind of a horrific candle here. Breath is poor across the board.
So last week I was pointing out how we needed to. Let me just get back to a SPY chart here. How we needed to close above that 50-day SMA, because every time that so far this year that the price has dropped down underneath the 50-day SMA in a single day, the very next day it's recaptured it and gone back up. It happened on the 20th to the 21st of January. It happened from the 5th to the 6th in February this month, and it was supposed to happen this past week from last week, and from Friday. We didn't get that, so we're likely headed lower, and that 676 level is the breakdown spot, I think.
Okay. We'll see if we do get a breakdown here. Palo Alto, this is reporting earnings after hours here today. This thing has been straight down out of the open. The low from Thursday on Palo Alto was about 158. That looks on deck here again.
We're also, now we still have all week, of course, but we are trading beneath the 20-week SMA, something that we've also been keeping an eye on. We got support from the past 2 weeks, but now it's finally opened beneath that, and we could end up going lower. If we close beneath the 20-week, I think that's going to indicate there's some more downside to go. But at the same time, we still haven't, really even had much of a pullback yet. This move here at the price that we're 3% off the high. That's it.
Yeah.
That's 3%. We need to see 663 if we're going to get to a 5% pullback. So there's certainly an easy path to the downside to hit some of these levels.
And remember, we actually had Dan on this morning. He was saying this has not looked like this until recently. Maybe it is time for some more downside here. And again, I asked him a question about seasonality. I'd love for this pullback to really kind of align with the bottoming process that we normally see in March. That would just make swing trading here in the spring a lot easier.
GXAI trying to come back up and recapture VWAP, getting rejected at VWAP. Don't know if this means it's going to turn around and come back up and we're going to have a better day, but trying to recapture VWAP right now, GXAI.
God, I've got VWAP up at 164. I've got us nowhere near that.
My VWAP is 157.
And here's a quick peek at the market overview there. Rich mentioning that financials still look pretty good. And indeed, this is actually looks like one of the better heat maps or heat map buckets for us. Sure looks like information technology and communication services really the big laggard here. Apple bucking the trend, but remember, Apple announced that in early March here, they're going to have a new event where they're going to premiere a lot of new devices. So that's why Apple here is bucking the trend. Financials look pretty good. Healthcare looks all right.
Apple said they're going to debut a bunch of devices when?
Yeah, so here we go. So really quickly, March 4th in New York, there's going to be an event where they are going to cover the iPhone 17e, MacBook Pro featuring the M5 Pro and M5 Max chips, 8th generation iPad Air, and the 12th generation 8th generation iPad Air and 12th generation iPad, amongst other devices.
I don't like that lineup. They're not saying the things they need to say. All they're saying is, hey, all these products we've had for years, they're getting all upgraded. I don't think people care about that anymore, to be honest. I think they want new, innovative things. They want finally some AI glasses that can compete with Meta.
Or they want to know more about Apple Intelligence. We've also been promised a new and better Siri, which we haven't seen yet. That's been delayed. So to your point, yeah, I think that they're... Now, the other thing on the flip side of that coin, remember, we've had guys like Gene Munster saying that, hey, the fact that Apple is not really crushed on being a laggard in AI actually represents an opportunity. I think that's only the case if Apple actually executes something. To your point, 13, nothing in that lineup looking like it's going to address the AI features that we feel like we're missing, whether they're for glasses or otherwise.
Yeah, because when they specifically name products that are going to be featured, and then they say other products, then I think that's pretty much what they're going to be focused on, is what they've named. The other products is not going to be, if it's wearables, it's not going to be any of the wearables I want to see. So I really don't know that this is going to be that spectacular of an event, because it's just the same stuff. That's all it is. Just the same stuff with a new chip.
Okay.
I'm not excited.
Okay. 13's not excited. Book it. Book it. Maybe we'll ask Anne Marie about a potential options trade where we could capture that date.
And there could certainly be a way better trade than there would be a product lineup. I can totally see that happening. Maybe there's a run up into the event and then it's a sell the news. So
we've seen that a lot before out of Apple, to be honest.
We sure have. I was getting asked here, Energy Transfer pulling back on earnings. Do you see any floors on the chart? 13, thanks. So, the 20-day SMA, the price has kind of been riding that up since it captured it back on January 7th. We already got a little bit of support earlier this month. So I'm kind of leaning on the 20-day SMA. In addition to that, you also have the $18 level, which has been a support and resistance area. So that would be the next spot right beneath it that I would see. As far as a floor, though, if this comes down underneath 18 to like 1750, I think that's probably a really good spot. I have Energy Transfer, although I would like to have more of it. So if this comes back in, I'm going to, welcome it with open arms. I like this one for the long term. I just want it at lower prices. And there's certainly a number of levels I see to the downside where it can find support. And it's typically in 50-cent increments. So 18, 17.50, 17, 16.50, even there's a spot, as is 16. So they're every 50 cents, it seems to have a support and resistance area. So that's kind of what I'd be looking at here. But I really do like the way 17 looks.
Okay, good stuff there. E.T. Joe asking, when does gold return to being a hedge against down market days in equities? Honestly, I think when the commodity move here is fully corrected. So to Joe's point here, the S&P is down here 0.61%. Gold, or at least in this case, GLD, the Spider Gold shares, down 3.36%. So generally, these have been hedges here. Silver, same deal. This continuing its pullback here, 5.5. Maybe the market is moving down on a commodity correction. These things went too far, too fast, I would suspect. Still interested in anyone that has buy spots for gold or silver here on a potential bounce.
I couldn't tell you.
SLV daily looks like.
Yeah, I don't know for SLV, but I think the spot price for silver, I have a real hard time seeing that go under 50.
We'll see if we end up getting that.
Yeah. And yes, Crimbiscuit, Robert Duvall. It's kind of interesting that well, not interesting. It's sad that he passed, but what was interesting
Indeed.
is I had just watched Gone in 60 Seconds the other night, like on Saturday. I was talking to my son about it, because we were watching the F1 movie, which was pretty good. I liked it. And he made a comment to me about cars, and I told him about Gone in 60 Seconds. So I ended up watching it, and then that passed away. So really weird set of circumstances, but that's one of my favorite Robert Duvall movies with him in it.
It's me too. And it doesn't get mentioned because it's obviously not one of his big famous ones, but Gone in 60 Seconds, that Nick Cage movie, that's one of my favorites. Robert Duvall's character in that movie is phenomenal. We also lost Jesse Jackson.
Yes, we did.
I found that this morning. So, man, oh man.
Yeah, back in a time when movies were only enhanced by CGI and not made entirely by them.
Tesla down here 400. So, So Tesla doing its best to hold on to 400 here. It actually looks like this is taking two legs down here today.
Great one, Joe. That's awesome. Awesome and very topical.
The market's getting napalmed, and Duval would have loved the smell of that. That is really well done. That is really, really well done.
Great one. Pick some B at 45.45. Says retro. The Dow is at 50,000. It is
just under.
I'm just trying to find something that looks good. I mean, it's GXAI. GXAI did come back up to, towards the VWAP. Hasn't, retreated from it yet. Maybe it recaptures it, but volume just continues to dwindle.
I don't like this. I don't like the action. You commented on the volume dwindling. This was basically a bounce back to the 15 EMA on my chart. Did not have the strength to get back above it. I wouldn't be surprised if we probed a little bit lower. Rhyme, which you talked about earlier, this was halted earlier to the downside. Looks like this has taken the next leg down here. We're down 16% from the close. We're basically right at the squeeze area. This thing just kind of marched up, but then really started to squeeze right at the close there. We're basically right at that same area here.
And, I think it's worth at this stage reiterating, this is probably going to be a very slow week, being that it's not just a short week, but also the week of the Lunar New Year, which is going to have a lot of markets in Asia closed. So there's going to be a far less participation in these markets than there normally are. So less volume. Things that are setting up may not get their breakouts because there's not enough volume. This might be the week to get that shopping list ready. Maybe look for some opportunities. I think next week we could see some turning around as Asian markets reopen.
And really quickly, just while we're talking about this week, here's a look at the earnings calendar for this week, the truncated week. As mentioned earlier, Palo Alto reporting tonight. That's probably the biggest report here tonight. Looks like Devon Energy, EQT, EXE also reporting here. But that Palo Alto, definitely the biggest one. Tomorrow, let's see. We have Wingstop in the morning. I know we've kind of talked about that one recently. I guess it'll be interesting to see what Wingstop does. Booking in the evening, Carvana in the evening. That should be fun. And then on Thursday here, Newmont in the afternoon, Copart in the afternoon as well, Texas Roadhouse in the afternoon, John Deere in the morning on Thursday, Southern, a couple of energy names there in the morning. So some more earnings here, not crazy ones here this week. TDS reporting Friday morning. So just kidding. We're not going to joke about TDS here. Nonetheless, more earnings here this week. Unsure if any of them will be really great, but it's just an outlook there on what we got. Okay. Let's see. What else do you folks have? Boy, it's been kind of a sleepy Tuesday morning here. I feel like sleepy for the market. I feel like the energy levels are just down across the board.
Even the market's still trying to come back from President's Day weekend. It's still rolling out of bed.
I will say I love the weather this weekend. It was so good.
It was nice. We did outdoor cooking a lot this weekend.
Oh, I bet that was really good too. By the way, VIX here holding 2230.
Well, folks, do you have any larger cap names that look interesting? Because a lot of these small names just look like crap right now.
This might be, Matthew, I know that you were joking earlier. Your hands are tired for sitting on them for so long. That might just be the next move here. I don't really see anything great.
Palantir, that's about 1% lower here. This looks like it's still coming to 120. 120 gets a bounce on its way down to 90, in my opinion. Now, when we do get this, support that I think is coming from the 120 area, I think that's going to take the price back up to about 142. That's my expectation. Maybe it doesn't go that high. Maybe it goes higher, but that's my expectation that we get support from 120, try to come back up and recapture 142. And I think we fail. I think the price fails at that, and it comes back down, and that's when it goes through 120. So that's kind of the price action I'm anticipating from here.
Rocket here. We talked about this recently. Chicago Realtor, I think it was last week, asking what we thought about this one. I know that they had some RESPA violations going on. Again, I do want to see what happens with some of these home builders. We'll see if Rocket picks up at all going into the home selling and buying season here this spring. I don't feel great about it, though.
Jay, floor doesn't look too bad. Does not look too bad. Would be great if this move after the earnings, if this takes us back up to on a trajectory that fills this gap from 2025, the summer of 2025. We are in a bit of a downtrend. This doesn't look too bad to me, if I'm being honest. Let me look at the larger term time frame here, see what we get with that.
50 seems to be the next really important spot here.
Okay, this gives me even more insight. Oh, I think I like this even better. Okay.
Retro says Olympic update, the U.S. sucking at the cross-country race. The U.S. men's and women's hockey team have been absolute wagons so far. The women especially. They shut out of Sweden yesterday. They're going to play Canada in the gold medal game. And it sure looks like on the men's side, we are barreling towards a Four Nations rematch of Canada-U.S. Both of those teams look extremely sharp in these Olympics. So looking forward to that, to your point, Retro. I missed biathlon yesterday, which is one of my favorite events.
I haven't really attributed the U.S. as being great at runners anymore, unless we're running for office. That's about the only running we do.
Even that's debatable.
So, yeah, okay. So, Sel, you like PLTR around the fib 145? What price is that at? I'm not sure where you're drawing your fib at. Want to discuss BMNR, Beast Industries theory? Hey, go ahead and drop it. I'd be curious to see what you got there. Rocket just got rid of my mortgage last week. So happy. So they sold it to somebody. All right. Biathlon is crazy. Skis and shooting. Yeah, Yeah,
Like I said, man, biathlon's fun. I don't know how you ski and shoot in the same thing, but it's cool. All right, sorry.
I want to. They need to do some kind where you like a bicycle and shoot, or even motorcycle. That'd be a dirt bike and shoot.
Actually,
Sorry.
they do that in the James Bond movie. For your love only, for your eyes only. Excuse me.
I'm here for it.
They do. One of the German defectors actually rides a motorcycle and shoots off of them. Anyway, I'm nerding out a little too much there.
New event for the Olympics. We'll bring all the countries together. We'll call it bonding in honor of James Bond.
Hey, I'm all for that. You guys were talking about Palantir earlier. PLTZ. This actually, we've talked about trading this before. This thing just looks range bound too. Got everything I click on. None of it looks like there's anything really good as far as a trade goes.
Buffalo is adding Amazon.
Oh my God, BMNR down at 20s now.
I don't think it's necessarily a bad idea to start considering some of these larger names. I don't think that's necessarily a bad idea. I think we're getting some discounts in some of these Mag 7 names, and it could we could be seeing some of these prices for the last time. I think that we're still going to see some new heights in these Mag 7s. Maybe not immediately, but once we find they find their footing and turn around, I think they're going to be gone.
Here's a look at Amazon. Do we think that this is going to fill this gap down here to 194-ish?
190 gap to 194.
Yeah, so we have a gap here from what looks like 194-ish. I might not be getting exactly right. And I'm just wondering, we got close. Do we actually fill that gap before we turn around?
Could even just go right to 190 and get support there. Maybe 188. I think I don't think you're wrong about there being support coming, but where it's just a matter of where does it we fill the gap, or is it 188 or 190?
No, you're talking about it might be a good idea to have some of these big caps to look at to get ready to add. So started here with Amazon. Netflix, by the way, looks like it is holding 75 anyway.
Yeah, Microsoft might not. I don't think it's going to have a whole lot more to go. I think maybe it goes to the 200 week, and then that's enough. Let me see here. What kind of move is this?
200 week I have at 375. That's only 20 points away. Could do that in a day if things really got nasty.
Yeah, I think that this is a pretty big downside move for Microsoft. To me, I think that there's not a whole lot more downside left. 260 is a really strong level for Apple. If it breaks, it will be a strong support moving forward. Let me see here.
Here's what your Apple chart looks like.
So you're talking about breaking over that, I'm assuming. Let me look at a longer chart here. Yeah, maybe. I'm not sure about this monthly candle. Let's see how this month closes. You've
got me wondering if we see a sell the news event here early March. Now that you mentioned that, you got me wondering about that.
I'm and it's my opinion because I just don't like the lineup of what they said they're going to be featuring. It's all the same stuff, just new, same product, different chip. This lack of innovation is killing me with Apple.
Okay, tell us how you really feel.
No.
Supric wants to take a look at another chart here. This is Texas Instruments, ticker TXN. Ryan, can you share your views about Texas Instruments? I've seen a lot about them on X. A lot of people mentioning it's going to break out soon. Can you share your views? So for the breakout part, it sure looks like it's trying here, right? It's nice little impulse move. We're doing a good job holding here. It looks like it wants to go higher. Texas Instruments, they're doing some of the stuff for vehicles, right?
They make a lot of legacy and analog chips. Yeah.
That are used in automotives.
Yeah, they're going to be used in automotive as well. So I've got a broadening wedge for TXN that's been taking shape since 2021. It looks like we're trying to break out of this broadening wedge, and if we can, 240 is going to be the spot where I think we might run up to before we back test the top of the wedge.
Where do you have the bottom trend line starting? I think I got the top one all right.
July of 22 through the low of October of 23. Yeah.
So like this, I think, is about what you got.
Yeah, more or less, that's about it. Yeah. So it's kind of just a broadening wedge there, and looks to me, because it's kind of in a megaphone pattern, like it's it's come up from a nice ramp up since 2013. This looks like it could break out soon here. Now, if I'll say this, if this comes back in from the testing the top of the wedge here, I think support's going to be at 200. You see how when we ran up in 2021, we kind of topped out at 200, and then we came back in. So I'm looking at that as support if this breakout doesn't occur up here this year.
Okay.
If we come back in, that's where I think support we could find it.
Okay, that actually looks pretty good.
Yeah.
Did you guys see the tweet from the Morgan Stanley strategist? If the hyperscalers say the market doesn't like the CapEx spending, will they reduce CapEx? If so, some of the memory names are going to go down fast. No, I did not see that. That is interesting. So we're basically thinking if there's an about face on, that's interesting, Jay. So if there's an about face on the CapEx, you're thinking that the best trade there might mean some of the memory names to the downside. Do you have a favorite one between SanDisk, Micron, Seagate, or Western Digital? Tell you what, these charts look, I don't even want to say it because I'll be wrong. I'll just look like an idiot. These charts look like they've topped.
Let's see.
Here's a trend line on Micron. I'll do one on SanDisk as well. I got to spell it right in order to do that. These charts, I've been wrong every other time I said that they've topped, but they sure look like they've topped.
Well, 440 for Micron's a clear resistance area. I don't know if this is topped. It looks like Micron could have topped. If I'm looking at a weekly chart, I've seen not this week, but the past 3 weeks, we've been trying to get over 440. We've gone up there, but haven't closed up. We just come back in. So that kind of speaks to this potentially being a top, but we need to see that resolution to the downside. And if we're going to get that 365, that looks like that's the support area that would have to be lost in order for the breakdown to occur. So we're still up here. We're still kind of compressing. I'm not going to, say that it's certainly going to come back in yet. I think we need to. There's still some more, indicators that need to be seen first. But I would say that 365 is the support area. That if we lose that, I think that's going to give you your confirmation of more downside.
Okay. Joe here saying electricity bills in New York, New Jersey, and Connecticut are skyrocketing. There will be a big push for use-dependent electricity pricing that could hamper the data centers. Well, remember, we're also having a lot of those companies say that, hey, we want to accept the power increase for that. We want to accept the bill. It's not just one company; it's multiple. So I would imagine if that continues there, maybe that will soften that blow. Joe, that's Joe, the viewer.
That energy demand you were seeing show up in CPI as well. Lots of high usage on the gas utility and the electrical utility side over the last report.
Wisdom Grand Rising took an extra day. It looks like a lot of people took an extra day, and I'll be honest with you, I can't say that I blame them. We are in the chop zone here in the broader market, and I still right now have no trades on today. No new trades here today.
Let's take a look at RGTZ. I imagine that's still doing pretty well.
Apple up 2%. Apple, one of your best performers on the back of that announcement of its event.
Okay, I'm gonna look at Apple again, because if this is going to be a play into the event, then let's look at some.
This could be a 1 day play though. 13.
And you might be right, because we're beneath some moving averages. Like if we can't get back above the 20-day SMA, this will be the third close beneath it, and we could certainly just head lower from there. So I see your point. But maybe we do end up trading higher into that. I mean, we have all day to see what we end up getting here. So maybe we do end up trading higher into that event. If we do trade into that high into the event, I think that's a sell the news.
Okay. Okay.
You have the most data centers in any place in the world.
She's saying Virginia does.
Well, you might get that title taken from you pretty soon by Texas, because we are building a ton of them.
Oh, that's right. One of our viewers, Tiny Pie. I forgot to mention that. I forgot to even get this queued up. I promised him that I would have that ready for Tuesday's show, and I dropped the ball. So Tiny Pie, if you're out there, I'll have to do it tomorrow. Walked by a ASTS office in, I believe, Spain. Sent me a picture of it. There's also apparently a quantum office down the street. So they're into that high tech over there in Spain.
Interesting. That whole park must have a bunch of companies that are on the exchange then. Looking at Qualcomm, because somebody mentioned, where'd that go? Retro, is Qualcomm lumped into the possible breakdown? Breakdown of what, the AI names, or what breakdown? I mean, this thing has been getting hammered, I think, since they had their earnings. This is about to initiate a death cross here, although we just had the golden cross in September, so I'm not sure if that's enough time. It looks like this could still go lower, and I think you'd want to keep an eye on that 20-day SMA. If we get rejected there, then I think, yeah, this comes down to 120. Looks like it's trying to recover, though, so I think that's why I would want to keep an eye on the 20-day SMA.
Damn, Matthew, your south suburb of Chicago, your water bill is $300 a month. That is crazy high. What suburb, if you don't mind me asking? If you don't want to share, that's fine too. What did you have, 13? Sorry.
Just got to mention here, I'm not here to argue facts, mentioning GEV.
That's been a good one. One of the few good ones. I'll tell you what, I don't often say it, but breaking the rule on the island trade and staying in it paid.
Yeah, this is one of my data center plays on the energy side. They're going to need, I mean, even if not data center, just the fact that America needs electricity capacity, this is going to be one of the names for it. This makes the natural gas turbines that are going to be using a lot of data centers in states around the world. They've got I think they've got a deal going on with Syria now too. I mean, all over the world. Did come off of its peak that it hit. It was like 846. If you're wondering where the support is, it makes two of us. I mean, I could see it come. I could see it come back underneath 800, but I'm still got a long-term prospect on this. Now, if this CapEx thing does, bring a lot of these different associated names in, it could, this could be another one of them. Because if, fewer CapEx spending on data centers means fewer energy projects like this. So
that's a really good mention. The interesting line. And then also earlier we did have some news from Velo. I know we didn't necessarily cover this in the pre-market. Probably a good thing. This Velo move took us to 13. What a reversal here. Stock down 13% now. And looking like it's going to keep pounding the lows here. No good on Velo. And a lot of not looking good stuff out there today. I wish I had.
Nope.
I wish I had something better to tell you. VIX basically right in here, 2250, not really moving, just kind of chopping along. Bitcoin down at 66.8. Crude coming in a little bit.
For VELO, this looks like there could be some support at 8. We'll see if that ends up happening here. I'm just looking at a daily chart. 8 seems to be where there's, the 200 day SMA, also some previous highs, some consolidation beneath that 8 area where it could be a demand zone. So looking like 8 could be interesting. We'll see if that ends up providing support, VELO.
Okay, and one of your best traders here today may be OLB. It may be the penny stock.
Let me see here.
And Corey, by the way, I see all of the stuff that you're giving out here on BMNR. I'm sorry that I'm not able to follow along with you, but as always, as I've always encouraged people, sharing any due diligence that you do for either the purpose of simply sharing it or for the purpose of trying to refine it, always welcome here. So appreciate all of that, even if I'm not calling it out in every chat there. Appreciate you sharing that with the group.
This is the Tom Lee associated one, right?
Right. The BMNR, yes.
Yeah.
That's the one that you see all the pictures on FinTwit of him being down $10 million or whatever it is. That's the big investment that he's down on. We were trading that, I think, in a 40 handle. It's down here at 20.
Yeah, and it's probably just because of the crypto angle, and crypto's coming down hard, right? That's, what is it, Ethereum that they have in here, or is it diversified with other stuff?
Yeah, it's Ethereum. It's an Ethereum play.
Okay. He's down 8 billion.
I'm sorry.
Is that what he is?
I think I said million. I'm sorry. Brian's
okay.
Right.
I'm not here to argue facts. Fix is another one. Well, Fix, isn't that no? Is that a home builder? I know Nail's the home builder. What's Fix? Is that like
Comfort Systems?
Okay.
I believe this does like HVAC stuff for some of those data centers. So that's just why the chart just looks awesome.
Okay.
We talked about this very, very briefly on Happy Hour last week.
Okay, so I think that's kind of what. So what you're getting at here is when it comes to these, and I try not to go too long with this because I know we're running out of time. But this is because we're talking about data centers. Maybe we're not going to be spending as much money because of all the capex, and that's scaring the market. So is this going to be one of those things where we see all of those infrastructure and construction names come in as well? So we got Fix. What's some other ones? VRT. How's that doing today? Is that down? No, that's up. How about LMB? Is that down or up?
Sterling Construction would be another one. So here's LMB.
Yeah, so those are up.
That's up 1.2%. STRL is Sterling Construction. That's down 2%.
Doesn't seem like that theory that I have is quite holding up based on all these other names. So maybe we're just thinking a little bit too early here now, but I that's what I'd be keeping an eye on. If those construction names start to come in off of the fears of capex spending on these data centers, I think that's the thing I'd be looking for here. What's the scoop on HON? If there's news today, I didn't hear about it, but this is one of the names that I absolutely love, and they've got a great quantum angle. I think this is going to be AI and quantum. You're going to want to play on, but this one, really, really nice run it's been on. It probably needs to end up cooling off. I think it could come into around 225, 230 as it cools off. So.
Okay. 13, really good stuff here from you. Any closing words for the group before we move over to Anne-Marie for the day?
Well, folks, if you sat on your hands like Ryan and I did, then
no trades today still.
Then you'll be locked and loaded to have capital ready to fire out tomorrow morning. Hopefully we'll get some better trades. Maybe this is just a one-off day, or this will just be kind of the thing we see for the week, where it's just it's the weakness is here until the Asian markets open back up from Lunar New Year being over. So this might have to be that week. We can talk more larger stocks. But until then, enjoy Anne-Marie, and I'll be back here tomorrow. So take care, folks. Have a wonderful rest of your day. Goodbye.
All right, 13, take care of yourself. Really good stuff here on a Synthetic Monday. 13's departure leaves room for Anne-Marie. Let's check in with her. Anne-Marie, happy Tuesday. How you doing here today?
I'm doing great. I just get so tickled when I listen to 13 say goodbye. He's just so no pomp and circumstance. Goodbye.
Nope.
And he's out. I just love it.
I tried to raise it with some dad jokes especially on a Friday, and he doesn't even seem amused by those, Anne Marie. So we do what we can here. We do what we can here. Look, we're having just kind of a rough day here. It's not a whole lot in terms of some of the action. Looks brutal. So, well, what do you got for us?
So, in a broad scheme, here's what we're looking at. And so I'll just put the SPY up here very quickly. And we are now below the 20 simple moving average on both the weekly and the daily. And so what we're in the midst of is a significant repricing that is waiting for buyers to move into the fray to help everybody out. This has been the place where people go, wait, this is by the dip. This has been by the dip. I mean, take a look. Since December, we buy the dip, the dip. And now here we are coming into the space, not really buying the dip. So there's really something a little bit different. And I believe it's material repricing. And so notice I've gone claw crazy, not claw crazy, clawed crazy. I don't have the guts to move OpenClaw onto my personal computers yet.
I was going to say, you're going Claude crazy. What on earth what have you developed now, Anne Marie?
So I got something that tells me when you've got good selling opportunity for premium versus buying opportunity. And right now we have a potential trend that says, hey, we could stay up in an elevated zone of expensive options. But this is normally the place where, as the vol begins to spike and move up, we get a great opportunity to sell premium. So it's in a sideways patch. If we sell the premium, we can, of course, sell the call spread up there, but in turn, we would buy the put spread if we were taking a gamble on price action moving up. I'm not doing that because I believe that where we are from a weekly perspective tells us that just about every bounce ought to get sold down into the support structures. Remember, we had this thing that said, hey, listen, by about the 11th or 12th, we'd have this fade and then we would bounce. Well, a brand new one has shown up just a little more that says, hey, the bounces will sell, and that should be into the first week of March, where we'll have another bounce and then a potential fade. So we've got quite a bit of choppy action in the formation. My thought is there could be a very cheap short waiting here. So first of all, let's see if we can find a cheap short. And where you would want to find it is in, it's never cheaper when we're in the weeklies, but we might see ourselves a cheap short if we look at, wow, all of these are brand new pricings. 670 to 660, not very cheap, right? $10 and $250 on the spread. So let's go all the way to March and see if we get better pricing. Where do I think we're headed? Suspicion says 660. So if we go 670 to 660, it gives us enough room to really make some money in there. We could do a butterfly, but you know how shorting is sometimes. Once it starts running, people go for the hills. And I read an incredible article about the interesting flows that started when the CME raised its raised the margins for silver and gold, where it forced the traders into. and it forced them into a short position in the index, specific index or all the indices. So what they've had to do with every spike is add more to their short on the grind downward. So we've got ourselves what looks like a potential leak until that options expiry goes, when they can roll into the June contract. And so that puts us into the March area.
Okay.
Very interesting thought process. Had not considered it, but it looked interesting. Now, here's what you could do. If you go, yeah, if I manage this butterfly, can I get something pretty? And I think if you said to yourself, what you're going to do is really hawk this down. And the second it hits 660, you get out of Dodge. You can get it for 68 cents. And so not a bad place to look, simply because everything's telling us, listen, we've got ourselves a fade. The flip side is it could easily bounce before it fades again. So there you have it. So I did a scan. Let's go to the scans. And I scanned for option flow in the NYSE. And so let me show you what this scan is for folks that have Thinkorswim. Okay. I just used days to expiration 7 to 60. That's all it's going to look for. It's not going to look for expiries earlier than that or later than that. So I wanted a small list. Then I wanted to know where today, where is volume in a specific strike at least 3,000 in terms of the volume. And it gave me this group. And so what we have is HUN for the March 26, 11 put. I think these guys just reported. Yes. Well, maybe they will be reporting. So did they report? They are reporting before the market open tomorrow. So a bunch of people have said, yeah, let's get after that short. 22,000 puts. So if you're a guy or gal who wants to take that trade, you can say the following. I'm going to go to Feb, gives me 3 days. If you want to go to the 11, you can do it for 20 cents, but that's not where they are. They're in the March one, 20,000. That's 55 cents. So you could say, gosh, do I want to do that for 55 cents? You could go 11 to 9, and it'd be 38 cents for $2 move. That's, what is that, 2 3/4x? It's pretty good. It's pretty good. Is there a hedge here? Potentially, because there's 15,000 in open interest here, but the volume today is 20,515. So they're definitely sort of hedging things. If you want to hedge yourself and follow along with them, you can do the same sort of thing and buy yourself 2 of them with $2 up. It's still 50 cents. So it's almost $2, almost, 3 to 1 in terms of return. If you took both sides of them and it fell right into where it's going. So very cheap from that perspective. So the next one is NCLH. I don't know who they are.
That's Norwegian Cruise Lines. They fired their CEO on Friday and had news here today.
Wow. NCLH. Yeah?
Yes.
Norwegian Cruise. Interesting. Okay, and so they have earnings. Where did you say? Today? No, that's in March.
The news was not about earnings. They fired their CEO on Friday and Elliott Management took a stake. I like a 10% stake in the company.
Okay, so it's obviously coiling. What it's telling us is that it's a good place to sell premium in the short term, but let's see where these traders are sitting. Whoops. Let's go to the scan tab. They are sitting at the March 20 puts for the 6th of March. So that's that's just after earnings, because earnings are on the 2nd before market open, and they have positioned on the 6th at the 20 marker. So could be they're defending stock, could be they're thinking it's going to fall further based on the news. So the volume is a little bit more than average, but not by much. And so price action events look fairly sideways. I don't know. I don't love that one either way, but it does look like it's caught between 20 and 24. Could you sell an iron condor there? Yes. Is it likely to drop further after earnings? Yes. You know, the whole market feels very heavy right now.
It sure does.
And
yeah, it
so
sure does.
There's really nothing wrong with saying, okay, they are taking I think it's a quick insurance event, right? They're just defending. Wow, that's 20,000 in open interest though. So they're obviously defending this line. If you say, hey, I'm just going to follow the money, then you can buy that 20 outright. Or you can say, you know what, I'll do the 2019 and wow, that's a credit. Let's see if you can get it for a penny. If you can get it for a penny and you buy 10 of them, it's going to look pretty good because of the spread here, right? 23 to 83. That's why it's just a penny. Most of us aren't going to be able to get a credit, but we certainly could try it for debit.
Okay.
Yep. Looks really good. Let's see what else. We've got CCJ. Somebody's put in a put spread or a put there. We've got RKT. Is that Rocket Mortgage?
Yeah, RKT is Rocket Mortgage. Yep.
Let's have a peek at that, shall we?
That looked weak earlier today. We took a very quick look at it earlier.
Whoa, look at the seasonality. Holy smokes.
That's strange too, because this is supposed to be like the season for home buying, right? The early spring is supposed to be
except the market's rock solid frozen.
Yeah, exactly.
Wow. So, whoa. And so let's see what they've picked up. Son of a gun, right? Get the right one. 18 puts. Gosh, they're up 33% already today. The 18 puts for what? Feb 27. So it's this one. 18 puts. Again, this is a spread. See that? 18, 15.
Mm-hmm.
If you want to follow them in, 88 cents, $3 to the upside. Certainly can do it. There's 12,000 down here. You know, if it were me, I would say, why not do 18, 15 and give myself a whole lot more time for $1 and some change. You could put in a cheaper bid and see if you can get it a little cheaper, but this one's got horrific looking seasonality from the chart perspective. It really looks bad. And remember, the thought process is that if we move from one area of earnings and move back and start to fade, we're going to return to those areas of earnings, and those are all the way down here near the 15 marker. So yeah, that's very interesting. implied vol is spiking, and so the money, it's expensive to buy these options, which is why I would say, do a spread. Do a spread for sure. Now I'm rushing through all of these, but does anybody have anything?
Yes, I have one.
Yes.
I have one. I'm thinking Apple, because Apple, in a sea of red today, Apple's actually holding on to some green. And we have some news that they're going to have an event in early March where they're going to premiere a lot of these products, including an iPhone 17e, the new MacBook Pro, iPads, etc. So see if there is a trade here, given what we see here in Apple. And again, that event, March 4th. So I don't know if you want to capture that with the trade around it.
Okay. So if I were to look at this objectively, I would say it's range bound from a weekly perspective. We're barely holding on to the earnings close candle at 260. We moved up into exhaustion at 280 and gave every bit of it back. So today, the upside flow in Apple feels a little bit like, well, everybody else looks like garbage, so
yeah,
I better go there. That doesn't feel fabulous to me. It doesn't. However, the premium is solid. And so you could literally look at a spread that might give you some profit, but it literally is a coin toss to say whether we bounce or hold, because clearly we are in the middle of Friday's formation. And Thursday, we had a great big sell-off, and we've had no recovery into Thursday. So that would be the one where we stare it down and we go, hey, let's create an alert here and see if we can get above this zone and say potential recovery. And if that shows up, then I'll put it on our list together. The one that might be interesting to look at really is Amazon. And so Amazon has been choking around this $200 edge, just choking. Here's the thing. The theory or the supposition that we have with these new earnings formations is the following. If we move from one area to the next of the earnings candle, we will either bounce and recover above 212 or fail and head down to the base of the candle, which is at 180. That, and we've got a ton of volume from a standard deviation perspective. There's way more volume from a standard deviation perspective. And so there is a trade here. If I were a betting man, I would bet long back into the 210, 212 area. And so there's a lot of action right there. It's expensive. If we go to March, it's probably just as expensive as being in February, to be honest. So there, that move back to 210, if we just get rid of all of this so it's not so noisy, if we get back to 210, then we might get a reflexive bounce here. I would say it's probably March. So if the recovery takes us back to 210, we could do 205 to 215, and we could do a 1/3 by 2 for the 220 for $1.35. No risk other than the $1.36. But if it just goes up the $10, it's almost 10-1. So not a bad trade if you're looking for a big outsized move and then a particular fade. So I've got an alert set at that 215. Let me put it on this chart. Got it set on one of my others. So I'm going to do an alert here and see if the price action delivers. Everything is vastly oversold. It's coming into a steep, cheap historical volatility event. There are a lot of things saying, hey, it's cheap on the buy right now. So it could get into that space. If I were betting man, I would consider taking the long right there.
Okay. Good stuff.
Yeah. How much time do we have? About 9 minutes. We could do Fastly. We could do Valet. We could do
why don't we start with Fastly, because that was a trade last week that a number of folks were looking at.
All right. Okay, FSLY, right? Fastly. I don't know what Fastly does, but the earnings event obviously was a rock star event. The premium has exploded. It was really high into the earnings. That's very interesting. And now, although it's still high, relatively speaking, but it's come down a whole lot. A lot of buying here, you know. Do you know if it was, of course, it was some kind of beat, but did they have,
it was a massive beat. So their EPS beat by 100%. They beat on sales by like 11 million, but I think it was the guide. Let me consult Pro here because it's got a lot of this really good stuff for us, Anne-Marie. Is that what you were asking about?
Yes. Okay,
so let me see what we got here. For heaven's sakes. I'm sorry, I'm struggling so much. EPS here. So their EPS guide was for 23 to 29 cents. That was versus a 14-cent estimate. Their sales were estimated at 667 million. They guided for 7 to 720.
Oh, gee.
For full year. So it was a huge guide above estimates, and it was a big beat in this most recent quarter.
Okay. So if you're saying to yourself, looks pretty good, you know, I would sell some premium here, but I wouldn't sell it for long. So you could sell the 15s and say, hey, I wouldn't mind being put to 100 shares of this to get $278 of risk for me to take 65 bucks. And then if I get put to it, that's going to be amazing. So here's the only trouble spot. Because it moved like this, what we have to do is say, has it ever moved like that in some other space? And so the answer is yes, but in the opposite direction. And so this is truly a reversal of fortune. Truly. It's earnings here, fell like a stone, continued falling. Earnings here, fell like a stone, continued falling. Early earnings here, held the low of earnings, broke the low of earnings and recovered, fell like a stone, continued falling. And then for these last few quarters, it's held the low, but that's all the way down at 8. If this area that's been running since April of 24 holds as a front line, it's got some legs. Uh-oh. Do you see that measured move?
Look at the box. The box. Bring it out again.
Oh my goodness. There's the box. Yeah. So I would sell a put if I were doing anything here, because it's very likely to give at least half back of this formation, even if it is a reversal of fortune. Because remember, think about this. People have been used to, oh, here come earnings. Let's sell it. Let's get in front of it and sell it. You could see it drag down into earnings. Sell it, sell it, sell it, sell it. And that's what they did. This is a short covering event. This is a short covering event. And that short covering event, remember, who are the only people that are compelled to buy at higher prices? It's the short who's got to get out of the market. And so it's come right into old resistance. I'd look for a 50% retracement. If you wanted to flat out say, you know what, I'm going short this baby, you could easily say the 12.50 for 43 cents, $2.50. That's, 3 to 1, 4 to 1. Looks like
that doesn't even look very expensive at all.
No, it doesn't. That's a good trade. I think it's a good trade. So, yeah, and it's got a ton of open interest. So people were there. Were people selling this edge? Maybe. Were they buying it? Maybe. But now people are piling in. The volume today is well over 5,000, but the open interest, it's if this opens up tomorrow and that number is 2,000, everybody here sold.
I was going to say, I wonder if they're closing that.
Exactly. That's exactly what we're thinking. All right. Hey, oops. Sorry. Here we go. 2.5 minutes to sell. I mean, to the end of the day for us together. Is there any quick?
Can we take a quick look at CoreWeave? Looks like there's a discussion here in the chat on CoreWeave. I know that's been a very popular trader amongst our group, as well as it's being connected to the AI trade. So maybe if there's anything that you see here in the chart on CoreWeave, other than that series of lower highs.
Yeah. So CoreWeave, the last time I talked about CoreWeave, I said, this chart's got some probs. And so it does have some problems. We're in the middle of a repricing. That being said, it's got some movement into earnings. And we have 226 for our earnings event. If we take a look at our earnings boxes, our support ledge is 52. Wow, that's savage. But notice the last earnings event, just a cataclysm of motion downward. So let's take a peek again. Let's see where they're positioned. 13,000 open interest at 70. The vol is extremely high. 42, 47.50, 70, 80, 107,000 open interest at the 100 mark. Wow. So what could you do? Where are we? 92. What are they pricing in for the position? When are the earnings? That would be the 20. You'd have to use the 6th or the, I don't remember here. Let's see what we've got going on. Price it here, 10, 20 bucks is what the earnings event is saying.
So the earnings are the 26th after the close. So that 27th will cover it.
Yeah, so that was it. Yeah. So it's looking at about $21 for what they're pricing into the move. And so $21 is 70 or 110. And they're parked at 100. So, if you're thinking, hey, it's going to recover, I think the 110, the 100 to 110 butterfly is 85 cents for $1,000 of upside, and 92.72, they're obviously sitting at 80. So you could go 80, 70, 60. That's a little bit more expensive. So the fact that the put side is a little bit more expensive tells me that the vol is cramming itself into that space. And so, if it were me, literally, I would just buy a regular spread.
Okay.
I mean, it's a little bit more. Granted, if this butterfly works exactly the way you want it to, it's 10-1. But if it ends up falling off a cliff and heads into that 52 level, your goose is cooked on that butterfly.
Okay. All right, Anne-Marie, good stuff. I know it's been kind of a ugly week so far, but we'll see how it shakes out here, and we'll see how we're doing on Friday. Thanks for joining us here today.
Absolutely. Hey, take care.
All right, Anne-Marie Baiynd, folks, we will see her again on Friday. And actually, it looks like my camera's fine now. What on earth is going on? Producer, do you see this? It looks like there's no more lag. I don't know what happened. Anyway, we'll work on fixing that. Folks, have a good rest of your Tuesday here. We'll be back at this again tomorrow. Stay green, stay safe, stay focused. We'll